growth strategy to overcome those challenges, and I expect the same will continue.
There's a little bit of talk about China, beauty products in China. Is it tough operating over there?
I just spent a week in China 2 weeks ago. I spent time with consumers in their homes. I spent time in stores. I spent time with our retail partner CEOs, and of course with our team, also with a number of government officials. And my view on the attractiveness of the long-term story there remains intact. Short term, it's rough. The confidence of consumers has not fully recovered since the reopening from COVID. Markets in our categories are down modestly year to year. But again, we're doing well from a share standpoint, and the rest of the business is more than overcoming that and several of the other global challenges.
John, I thought your margins were good, your gross margins, and you got it from a couple of, tell us exactly how much it went up, and it was productivity was the lion's share of it, but also price increases, but at the same time, you're able to increase prices. Commodity prices were actually moderating, so you're still able to raise prices. You're not passing along commodity increases, you're just able to raise prices even though your input costs are lower.
So first, the gross margin up about 550 basis points, operating margin up about 400 basis points, very strong progress. The pricing that you're seeing there is really a carryover from pricing that was taken previously that has not yet annualized. And then there's a modest amount of pricing that's occurring in some of the emerging markets as we need to overcome the impact of currency devaluation. But in general, what you're seeing there from a price standpoint is pricing that was taken previously, and that's why it's so important to keep our eyes on what's happening to volume, which is going to have to be a bigger component of the top line going forward. And as I said, we're very encouraged by what we see there, particularly in our largest market, the U.S. Again, past 5 quarters, -3, flat, +2, +3, now +4.
In the consumer in the United States, how you would characterize, actually we're supposed to say she, I think, some people do, consumer, but the consumer in the United States, what happened?
Generally strong, very interested in our categories in performance that helps address the problems they're trying to address. We've spent a lot of effort on innovation to ensure that our margin of performance is indeed superior, and the consumer's been very responsive to those moves. As I mentioned earlier, in the U.S., we're building market share, both value and volume, and that's pretty much true across the range of categories that we compete in.
Why is Gillette not valued? And this is, I think it's pretty interesting. These people at home aren't shaving, that the hybrid post-pandemic work culture makes Gillette worth less because they're like slobs at home and then they're not shaving or something, John?
No, actually, our grooming business has never been healthier. We expect about $1 billion.
We need good groomed people. Well, why am I reading that? The volume growth has slowed due to the hybrid post-pandemic work culture.
Well, I mean, there are still people who are spending more time at home than they are out amongst their peers, and sometimes they don't shave. But again, in general, that we expect to add about $1 billion in market market growth this year, of which will contribute to that disproportionately. The write-down is very simple. It's math. It reflects higher interest rates and therefore a higher discount rate, which means that asset is worth less on a balance sheet, or the intangibles associated with that asset are worth less on a balance sheet. And it reflects the strong dollar, so that money that we're making on the grooming business in markets outside of the U.S. translates to a lower dollar value. So that's all that's happening with that. It's a one-time non-cash acknowledgement of that reality, and the business goes on.
Great. And buybacks this year, is that
just a little bit below the 50 SMA. So if you were going to use the FIBIs on this big run, first stop would be right around 232. But I'm going to go ahead and stick with my support levels of 238.50 and 226.50. 35, somewhere in that area. That's Boeing. That's Boeing. Got to be safe. So this is going to be a fun one to watch. I'm going to go ahead and pull up the yearly time frame. It'll be a very strong buy right around 195. And it can. And get down there. Would have to depend on how the market reaction is, but we're around 198.
Than expected. The company said that despite elevated mortgage rates, net sales orders actually increased 35% from the prior year. As the supply of affordable new and existing homes remained limited, you can see, though, the stock down by about 5.2%. Squawk Box will be right back.
Welcome back. Squawk Box United Airlines shares moving sharply higher on full year guidance. Phil LeBeau joins us this morning with a very special guest. Phil.
Good morning, Andrew. Scott Kirby, CEO of United Airlines. Let's talk first off on why the stock is moving higher. When you take a look at better than expected in the fourth quarter, and yes, there's going to be a hit to your costs in the first quarter because of the MAX 9. But when you look at 2024 and your expectations, what do you see?
Well, it's really more of the same. 2023 really was the year the plan came together. United, a year ago, we talked about what was going to happen. The world developed almost exactly like we expected. We had higher revenues, great improvement in operations, improvement in customers' NPS, improvement in premium revenues, and there was higher cost inflation even than we were expected. But there's now a link because those are industry-wide cost pressures between costs and revenue, and they wind up like fuel as a pass-through. It's led to great results in 2023, and the same playbook is running again in 2024.
Let's talk about your guidance for the first quarter. And in January, you're not expecting to get the MAX 9, which is grounded right now, back. In fact, it's going to be a 3-point headwind in terms of your cost per seat mile. Are you frustrated?
Well, I'm disappointed. First, I'm going to say on the MAX is that when it's flying, I'm 100% sure we have a pretty good handle on what happened, what the right remediation is. Our tech ops team has been working 24/7 on this. The FAA, to their credit, has been in there with us, in the weeds, on weekends, late nights. So I think we're near the end game on that, and the airplane will be safe. But I'm disappointed that the manufacturing challenges do keep happening at Boeing. This isn't new. I'm disappointed in that.
You're biting your tongue a little bit here. When you talk with Dave Calhoun, how frank have you been about your frustrations trying to run an airline and having these orders and not being able to get the aircraft or have confidence?
Well, yeah, look, we're Boeing's biggest customer in the world. They're our biggest partner in the world. We need Boeing to succeed. And I have a lot of confidence in the people of Boeing. There's great mechanics, great engineers, great storage history. But they've been having these consistent manufacturing challenges, and they need to take action here. That's the point to Dave and to anyone is it needs to be real action to make it.
And when you tell Dave Calhoun this, what does he say?
Well, he says yes, but I'm a lot more, he doesn't disagree, of course, but I am a lot more interested in seeing the actions. Like right now, we need to get through the MAX, we're doing that, but on the backside of this, what are the real actions to really get the manufacturing process back to the high levels of quality and consistency that historically existed at Boeing?
I want to show everybody what your order book is in terms of deliveries of MAX aircraft. And 150 of the MAX that you expect to take delivery of at some point are the MAX-10. Hasn't even been certified at this point. Do you still believe you're going to get those planes, and when do you think you get them?
Yeah, so we're now, best case, 5 years behind on the original delivery of the MAX-10. And as we've gone through the last year, internally at United, we've grown increasingly to believe that best case, the MAX-10 just gets pushed further and further to the right. So we'd already started working on alternative plans. I think this is the straw, the MAX-9 grounding is probably the straw that broke the camel's back for us. We're going to at least build a plan that doesn't have the MAX-10 in it. Now, we'll hope that Boeing gets it certified at some point, but we're going to build an alternative plan that just doesn't have the MAX-10 in it.
So you're going to take the MAX-10 out of your plan. How do you get the aircraft in that you were planning to get? Do you go to the leasing companies? Where do you get those aircraft? Because you know that you just can't turn around and find them out on the street.
Yeah, well, we're early in the planning process, so we'll see. But it probably means that we change the order book some. There's alternative airplanes instead of MAX-10s, at least for the next few years. And it probably means we don't grow quite as fast as we were hoping. We're still going to be, in absolute, the fastest growing airline in the history of world aviation. But we're not going to grow quite as fast as we otherwise would have, because the reality is Boeing isn't going to be able to deliver all the airplanes we were planning for.
Something ain't right.
24 airplanes short last year. And they're not going to be able to deliver all that. So we're going to work with
Fixed
Boeing.
it.
I've been Boeing's biggest supporter, and we're going to try
Glad
to
it came
do
back.
anything we can to help. But we can't. We're not going to get all the airplanes that we had delivered on the time frame we had, and we just have to accept that and rework the plan.
UAL
He's
earnings,
got a
that's what
question
it
for you.
was.
Becky, go ahead.
Yeah, hey Scott, I don't think I've ever heard you this frustrated. You're a pretty calm, cool, and collected guy, and you're still, you're not foaming at the mouth, but these are some pretty declarative statements. It sounds like you just said, this is the straw that broke the camel's back. You're frustrated with this. When you're looking at other options, do those include Airbus?
Well, I'll wait and see. I mean, obviously, there's only one other manufacturer that's really an option for us, but we'll wait and see. And Brett, more of the frustration is just I'm disappointed, and especially because Boeing is they're not only our most important partner, they're one of the most important companies in the country. They're important to the United States. They're a technology company, engineering company, our biggest exporter. And they are taking action. I just wanted to do it faster and more definitive.
Is part of the problem that they, it's a separate company that they're working with for some of these things. It used to be part of Boeing, spun off a long time ago, but do you think that that ultimately over time created a big problem?
Well, I'm not close enough on the inside to really know that, to give a definitive statement about that. To me, and by the way, when I talked to Dave, I talked to him as recently as yesterday. He says, the kinds of things that I wanted to say, but they need to take real action. This is really about blocking and tackling. They need to take blocking and tackling action. And because Boeing is really, they're not only one of the most important companies in the country, they have great people. When you look at the storied history of Boeing, they have wonderful people who want nothing more than to be the best. And they can get there, they will get there. I wish it was happening faster, but I do think that they will get there.
Would there be a point, Scott, where you say, look, not you, but the Boeing board, would there be a point where, I mean, how far back do you date these problems? This is just the latest, but is it 5 years? It's like 5 years, and it's, every time it happens, you're like, oh, is there a time where you say, every single time it happens, you go, all right, this is it. This is the last time that, and I just wonder what could have been done differently. Do you think someone else at the helm would have done something differently over the past 5 years, and is the board asleep? How do you explain it?
Yeah, I wouldn't say any of those. Like, I think my own assessment is, this goes all the way back to the McDonnell-Douglas merger, and it started a change in culture. And I think Dave, to his credit, has recognized and is trying to arrest and turn that the other direction. And so there have been really positive changes at Boeing because of that. But this is a long time building, and I at least think this goes all the way back to the McDonnell-Douglas.
So what if something happens again? What if there's something after this totally unrelated? Then you say, okay.
Well, look, I have a lot of confidence in the safety of the airplanes, and particularly because we know what happened with this MAX 9. I think we're near the end game on getting that back flying. That's really not the question for me. The question is much more about Boeing's ability to deliver the airplanes that they've committed to, and to get the MAX 7 and the MAX 10 actually certified.
Well, that's,
that's a bigger question mark.
The next thing doesn't have to be, hopefully, God forbid, it's a safety issue, something like that. But if another cut in how many planes you're going to be able to deliver, or some other bottleneck that causes things to be pushed out again, there could be I have no illusions that this is an easy company to run, but you're right. It is the premier manufacturing company in the United States.
Yeah.
It brings a lot of pride, and your chest swells when you think of watching those things take off and what they're able to do at 40,000 feet. It's just incredible.
It does, and that's also why I'm certain that Boeing, at some point in the future, we won't be talking like this. That Boeing is going to get back to the great storied history, one of the best engineering technology companies in the world. And they're going to get there. I just want to get there fast.
Want to quickly touch base on the 737-900 ER. Remember the FAA a couple of days ago said, hey, everybody, check these, do some visual inspections. You guys are almost done with those, correct? Everything's okay?
There's been millions of flights on this airplane. But as we always do in aviation, we double, triple, quadruple check anything. And so those inspections that we were almost done last night when I went to bed, they'll be done sometime today.
And one last question, business travel.
Yeah.
It continues to creep back, doesn't it?
Yeah, back to United. It is actually, it's only 2 weeks into the year, but we have seen a step up in business travel. We're back now, in terms of revenue, at least above where we were in 2019. It's still well behind leisure travel. It's well behind the growth in GDP, but we have seen a step up. Now we'll see if that continues for the balance of the quarter, but we have seen a step up.
Scott Kirby, CEO of United Airlines, on a day, guys, where, we talk about the business of United, but part of that, guys, is getting the MAX 10, and as you heard, they're going to no longer plan on getting the MAX 10. If it comes, great, but they're not putting it in their plans. Guys, we'll send it back to you.
All right, Phil, very good. Thank you, Scott Kirby. Coming up, a roundup of this morning's earnings, the futures right now. Little changed. It's been that way most of the morning, down about 10 points on the Dow. NASDAQ's actually up. We'll be right back.
All right, let's get to Dom Chu. He's got a look at this morning's pre-market movers. Dom, what are you watching?
I mean, it's a lot of earnings headliners, right, Becky?
Yeah.
The slate of Dow components. We've got a long way to go, a short time to get there. So let's see how many of these we can get through. We'll start with General Electric. Shares are down right now just about 3.5%. The restructured industrial conglomerate specializes in now aerospace power, renewable energy, reporting better than expected profits and revenues, driven in part by strong demand for airplane engine parts and services. But first quarter profit forecast did fall shy of consensus expectations, hence the down move. Now on to the Dow components. New this hour, shares of Procter & Gamble up about 1% or so far right now. The consumer products giant behind brands like Tide detergent, Gillette razors, Pampers diapers, reporting adjusted earnings per share of $1.84. Some investors are still parsing through what the comparability is to estimates here. Revenues are slightly below forecast. P&G also reaffirmed its full-year sales forecast. Shares are up about 1.5%. On the telecom front, Verizon shares are up 3% after posting a quarterly beat for profits and revenues. It also forecasts full-year profits ahead of estimates. Verizon was helped by much stronger than expected growth in new postpaid wireless phone subscribers. Those are those people who pay a bill as opposed to prepaying. So those shares up 4.5%. On the healthcare front, Johnson & Johnson shares are down fractionally right now in pre-market after the pharmaceutical and medical technology giant reporting better than expected profits and revenues. Its full-year profits were slightly below estimates, the forecast there, with a slightly better than expected full-year revenue forecast. Those results were driven by growth in its medical devices business. And then let's cap things off, excuse me, with a check on 3M. Those shares now down 5.5%. The diversified industrial company behind everything from Scotch tape and Post-it notes to medical supplies and auto parts, reporting better than expected profits on slightly weaker than expected revenues, but its current quarter and full year forecast fell shy of some expectations. So Andrew, those shares down currently nearly 5.5%. I'm going to catch my breath. I'll send things back over to you guys.
Thank you. Meantime, aerospace and defense giant Lockheed Martin reporting results. Want to get straight over to Morgan Brennan, who's got the details on that. Good morning.
Good morning, Andrew. Well, Lockheed Martin reporting a big beat. $7.58 per share GAAP earnings. That's versus estimates of $7.26. Revenue of $18.9 billion, a beat as well. Backlog now record $160.6 billion. Global conflict is spurring, quote, a strong demand signal for missiles and fighter jets and the other weapons that Lockheed makes. CFO Jay Malave noting over the past year, the, quote, sales flywheel started earlier than originally anticipated. It's showing up in 2024 guidance as well. Top line to keep growing, but profit and margins stay under pressure, with Malave blaming a classified program in the Missiles and Fire Control Unit. Profit recovery, that should start next year. The U.S. government's continuing resolution, that's baked into guidance. If lawmakers don't pass a 2024 budget by March, though, that could impact new awards. There are many on tap for the industry overall this year. That could, quote, haircut the sales outlook at Lockheed. On the stalled $100 billion plus supplemental for Ukraine, Israel, others, not a lot of visibility, but the funding of ramps of some weapons production, that could happen through that package. On the F-35 strike fighter, it's a quarter of LMT sales. Regarding the Tech Refresh 3, its dented aircraft deliveries, quote, we continue to make progress, according to Malave. On the Lockheed-Boeing JV, United Launch Alliance, no comment on the prospective sale of the rocket maker, but Malave saying, quote, we do like this business. Guys, you can see shares are up about 0.7% on this. I'd also just note, with all the strife in Washington, sales internationally are growing faster than domestically for the top weapons maker.
Morgan, want to thank you for that. We're going to keep our eyes on Lockheed stock this morning, as you mentioned, close to up 5%. Thanks.
So to come, we are going to talk more about earnings and then a lot riding on today's primary in New Hampshire. We're going to break down what it could mean for the GOP as we head toward the presidential election. Squawk Box will be right back.
Welcome back to Squawk Box. We are learning more about the hack of an SEC staffer's phone. This led to the fake social media post earlier this month, prematurely claiming that spot Bitcoin ETF had been approved. Of course, it was approved literally a day later, but the SEC now saying the hacker changed the password to the agency's X account. This after gaining control of an employee's phone number. It said that the employee was targeted in what's called a SIM swap, attacking through the telecom carrier effectively. The SEC also saying that multi-factor authentication of its X account had been disabled last July and was not re-enabled until after the incident. The FBI's investigation into the hack is ongoing, but as we mentioned earlier in the broadcast, the news you can use is if there is an opportunity to do two-factor authentication on your phone, which means not just having a password, but effectively having some kind of separate authenticator. In some cases, sending you a text message with a code. In some cases, having an app on your phone that has a number that changes randomly every 30 seconds, and using that number, go off and do it. Do it immediately. It's a good thing.
When we come back, a pivotal day for the Republican Party. We're going to find out if Nikki Haley can cut into former President Donald Trump's lead for the party's presidential nomination. And then the co-CEO of Public.com will join us, the Robinhood rival, making some changes for investors. We'll ask him about that and talk about the state of the retail investor. Squawk Box will be right back. Welcome back, everybody. There's a lot riding on today's New Hampshire primary for presidential hopeful Nikki Haley. Joining us right now from New Hampshire to talk about what a Trump win in New Hampshire means for the Haley campaign is Axios national political correspondent Alex Thompson. Alex, some of the polls I've seen recently show her losing by 18 to 19 points to Donald Trump. If that's the case, what is the potential for her campaign beyond this?
In the latest poll, the morning tracker from Boston Globe shows her down 22 points in the state. Now, if the margin is that big, it's going to be hard to see how that she can survive through the South Carolina primary. Now, because of the quirk of the schedule, the South Carolina primary is not for a whole other month. And campaigns usually don't end. They run out of money. And it's unclear if she loses by a 20-point margin, how she can go on financially and be competitive in her home state. Now, Nikki Haley's campaign has signaled that they are going to continue on regardless of the result tonight. They already have scheduled a Charleston rally tomorrow night. They've also sent out invitations to a number of fundraisers in New York City and on the West Coast. But the truth is that, Ron DeSantis was, in his campaign, was insisting he was staying in until he wasn't. So it's possible that this is just a show of confidence in order to keep people motivated. But also, if she gets within 10 points because of these polls, the expectations are pretty good for her. If she gets within single digits of Donald Trump, I expect this to go on for another month.
Ron DeSantis dropping out, you mentioned that, and most of his voters probably are going to former President Trump. That's the endorsement that DeSantis has given, and he even took a shot at Nikki Haley, where he said, because we can't go back to the old Republican guard of yesteryear, a repackaged form of warmed-over corporatism that Nikki Haley represents. And that may be key to our business audience, this idea that the Republican Party may not be the friend that it has been historically.
Absolutely. And it was so striking that most candidates, when they make a conception speech, don't go out of their way to insult one of the last rivals in the race. But that's because things between Nikki Haley and Ron DeSantis had gotten very tense at the point. And Ron DeSantis has been arguing forever that Nikki Haley cannot win a one-on-one race against Donald Trump. And he's working to make sure that takes place. Now, what is interesting is that the whole last year we've been hearing the field has to consolidate. The field has to consolidate in the way that the field did not consolidate in 2016. Well, that happened. We have a one-on-one race right now ahead of the New Hampshire primary. But unlike 2016, the field did consolidate, but then a lot of the voters and a lot of the candidates consolidated behind Trump instead of the alternative.
Alex, I'm watching the sort of like a phoenix from the ashes watching Donald Trump. Now, he always had the base, obviously, but it was such a low number. And there have been op-ed writers and a lot of other people that said that Donald Trump is the only person Joe Biden thinks he can beat. So when Alvin Bragg first did that, there was a certain number of people that said this is all a grand strategy by the Democrats to make sure Trump wins the primary and is the nominee so he can lose again in the general election. Has anything changed with suburban women voters? I mean, not every party is fractured between a rock-solid base and a rock-solid percentage of never-Trumpers. I mean, it's fractured. The Republican Party is totally fractured. You saw those guys we just put up. If I were a Democrat, I would take that as a real positive, that the Republican Party is fractured. There's some people that will never vote for him that are Republican.
Well, I'd say, what you just said is half true in that, someone that's covered Democrats for a while, I'm very skeptical of any sort of grand strategy at
they were smart enough for that. Seems pretty smart now, doesn't it?
Well, and this is why I said it is half true, because I can tell you, talking to Joe Biden's people and people close to him, that they do believe that Donald Trump is the weakest candidate in this field. And in fact, there are some people, Democrats very close to the Biden world, and some people inside the Biden world that see a great advantage to Donald Trump winning big tonight and starting the general election, because Donald Trump has been the greatest mobilizer of Democrats in history. Better than Barack Obama, better than Bill Clinton. The best grassroots fundraiser in Democratic politics has been Donald Trump. But to your other point, which is, I think, really key, now we see these polls that show, 66% of Republicans say they would still vote for Trump even if he was convicted, for example, or even though he's been prosecuted. Now, that seems like a shocking number, but the more important number is that 30% of Republicans would not vote for him. And the thing is, if you're in a close race and you can't get 20% of the Republican Party, this 20% that really is trying to vote for Nikki Haley, there's indications that some of those voters are going to vote for Joe Biden. And so, while it's one of those things where Trump actually may be an incredibly strong and basically unbeatable primary candidate, but he is a weak general election candidate in some significant ways.
Alex, thank you for joining us today.
Coming up, a lot more on Squawk. We're going to talk about the co-CEO of Robinhood's rival, Public.com. He's going to join us because he's got a very interesting announcement. As we head to a break, take a look at this morning's winners in the S&P 500 and the NASDAQ. We'll be right back after this.
news alert. We told you earlier that Dwayne "The Rock" Johnson is going to be on Squawk on. No, well, we'll tell you that in a second. Is joining the board of TKO Group, which owns World Wrestling Entertainment and Ultimate Fighting Championship. Now the company announcing Netflix is going to be the new home of WWE Raw beginning in 2025, and Netflix shares up about 10 points. The Rock, who in fact does follow now Rebecca Quick, will be on Squawk on the Street at 9:45 a.m. Today, along with that gentleman on the left there, who, you know, most people aren't as good looking as they age. He actually, I think he gets better and better looking. Ari Emanuel, the TKO CEO and WME MI agent. He didn't pay me to say that, but
you paid him. You paid him to say that.
Him a lot. I paid him to say that. That's weird.
You paid him to say that.
It's a warped string.
Meanwhile, trading platform Public.com now offering options trading. Retail investors use the platform to trade ETFs, bonds, stocks, crypto, and other assets, but it hasn't used payment for order flow in its revenue model since 2021 until today, and we're going to talk about it right now. Joining us right now with more on the state of the retail traders in the new year, Janik Mallon. He's the CEO of Public.com. Good morning to you.
Good morning.
So, for those uninitiated who may not remember the debate that really took over the public discourse for a while about this flow situation, why don't you explain what you decided to do then and what you're deciding to do now?
Right. So, in our equities business, where you're just trading single stocks, back after the events of GameStop, we decided to abandon the payment for order flow concept.
Yes.
The market structure, and today we're launching options trading.
And payment for order flow, for those who don't know, meant that the Citadels of the world and other folks who were effectively paying you, paying Robinhood for every transaction.
Correct.
And so there was always a question of who was the real customer. Was the customer the one that actually made the trade, or was the customer the market maker who was paying you a fee for you to trade on their platform?
That's been the discourse. And I think at the real heart of that discourse is, what are your incentives as a broker-dealer, and are they aligned with those of your customer?
Right, so you stopped doing it.
Yes.
Did that work for you, first of all?
I think it worked incredibly well. We proved on many occasions that we saw, at many times, more often than not, at least, better execution, because we passed a lot of those savings back into the hands of our customers because they got better execution by us going directly to lit exchanges. There continues to be a lot of discourse. The SEC came out with a proposal, as you probably know, also denoting that there's some conflict of interest here with regards to this model. Now,
it's not allowed in Europe, for example.
It's not allowed in Europe.
But it is
it's not allowed in Australia either, and maybe Canada as well, I think. Now,
but we should also say that Ken Griffin, who's been on our broadcast before, has also said that he believes that he's actually offering better pricing, and that customers that are trading through them, where they're paying the payment for order flow, actually get a better deal.
Correct.
Then why is he paying for it?
Well, so there's a couple of different nuances here also, by the way, to be mindful of. Number one, the market structure on the equity side is actually quite different from the market structure on the option side. So let me explain. So if you buy an Apple single stock, you know, some market maker pays for almost like the exclusivity to that flow, meaning that they will fill that order, no other market maker will see it, and so we'll never really know whether another market maker could have given you a better price. Now, the options trading market is quite different in that everything gets executed on exchange. So the market maker in the options trading world is really paying for a right of first refusal, or sort of like a first pass on that order, but it still goes to the exchange. And if another market maker comes in and offers a better fill, the customer will see the benefit of that. And so what's interesting is the SEC proposal sort of had, you know, some more lingo around this open auction model.
Yeah, that you can't
for the equities as well.
So, but now let's pivot to what you're doing today.
Yes.
Because that is a new announcement that actually relates to taking money for payment for order flow.
Absolutely. So options trading has been one of our most requested features in a long time, but due to all the skepticism of what the incentives are, how it all works, we thought long and hard about how do we bring this to market in a way where it's transparent. And there is no doubt that our incentives are aligned with those of our customers. And at the end of the day, what we decided is to pass half of our options trading order flow revenue directly back to our customers. This means
that you are taking payment for order flow.
So we will take payment for order flow on the options model, but pass half of it back directly to the customers. So it's not just a mechanism that benefits broker-dealers and market makers anymore, but end-user customers get to see the benefit of it as well.
Like, this is a stupid question maybe, but that sounds like, okay, we're going to sell the order flow exclusively to one broker. We're going to get paid for that. But we'll give you some of the savings.
Well, we won't go exclusive. So in the options market, we will not go exclusive. Everybody will work with various market makers. It'll go to various exchanges. So it's a lot more of an open model. It's not this like restricted competition model. There is
I still come
actually
back to the idea
competition
of
for each
why
order.
these guys will pay for this. Like, what's to suggest they're not front running? I mean, why would they pay for the order flow?
That's been a big kind of question for a long time. At the end of the day, we're not a market maker, so we can't even go directly to the exchange as a broker-dealer with this flow. So there's no real getting around these market makers in the options trading world, like the model that we have for equities. We just can't
let me ask you this, though. So this is just a sort of philosophical question. Those who actually are advocates of payment for order flow in the equities business would say that, in a way, some part of the payment for order flow is being shared, similarly in this case, like that you're doing, with the customer. Maybe not 50%, maybe it's not very specific about how it's working, but the argument would be instead of a Robinhood paying upfront, or forcing you rather to pay upfront, that there's some shared cost, and that the benefit of payment for order flow is allowing people to make trades at effectively a cheaper price.
Right.
You buy it? You don't.
Some people position it as a trade-off. We don't necessarily see it that way. We think that there's a best of both world scenarios here, and that's what we're trying to do with our options model, where there's no commission, no per contract fees, and you actually earn an order flow rebate for every trade you make.
Question for you. Some people are now trading with you, I think, because they like the brand. They like what you're trying to establish and what you mean. The other question is, how many people you think trade with you or trade with whomever because of the feature set, because they like the app better, because they, I mean, how does this all work?
That's an excellent question. I think really this entire space breaks down to two things: technology and trust. And trust is something that in financial services has been a key term for a long time, but I would argue after FTX, after Silicon Valley Bank, even after 08, like, it's more important than ever. And then there's the technology set, which has much more to do with which products do you offer, how do you research those products. And so we've focused a lot on building a multi-asset kind of platform where you can buy bonds and options, crypto equities, all in one place, and then get sort of real-time context around
30 seconds. Do you have a take on Bitcoin?
You know, we've seen crypto trading surge, obviously in Q4 with all these ETF news. We're still seeing in the retail community after those ETFs came online that there's a lot more trading happening in the sort of traditional crypto, if you could call it that. That's kind of weird to call it crypto like that, traditional, I suppose. The ETFs are among the more bought ETFs, but there's still multiples higher actual crypto volume happening on our platform.
Okay, Yannick, you got to come on back so we can talk more about it.
Of course.
Thank you.
Happy to.
Appreciate it.
All right, still to come, rundown of this morning's big earnings, lots of them. And we're going to have former SEC Chair Jay Clayton on ESG and Exxon's move to sue two activist investors over trying to force the company to cut emissions. Squawk Box coming right back.
CNBC.
Good morning. The biggest morning so far for corporate earnings. New results from Johnson & Johnson, Procter & Gamble, Verizon, and more. And it's the GOP's decision day in New Hampshire. Voting underway in the Granite State, where Nikki Haley looking to stop former President Trump's momentum. And ExxonMobil trying to stop a vote pushed by activist investors on a key climate proposal. We're going to get reaction from former SEC Chair Jay Clayton. The final hour of Squawk Box begins right now.
Good morning and welcome back to Squawk Box here on CNBC, live from the NASDAQ market site in Times Square, where Becky couldn't wait to get back here.
I take it back. I take it back.
You can't really hear it
because there's you can't hear it on the mic.
You can't.
My teeth
Our
are
teeth are
chattering.
chattering.
You can't hear it on TV though.
I know, but I'm gonna leave here. Just. I am Joe Kernan, along with Becky Quick and Andrew Ross Sorkin.
Make it stop. Make it stop.
I know, you're going crazy. U.S. equity.
It's been an hour and a half.
I know, and I can feel it. I kind of getting car sick. Oh, I shouldn't say that to you.
Yeah, but then I'll throw up on you.
Spew right on the set. U.S. Equity futures, some of that is 3M. 3M is a Dow component, a $60 billion market cap Dow component. They're asleep at the switch over at S&P or wherever it is. Dow Jones, S&P. Let's see, down 18 now. Treasury yields, take a quick look. I think we've backed up a little in rates. 413, 412 right now if you round it up to 413. And in China, shares of some Chinese stocks are higher in the pre-market. In the last half hour, China's securities regulator said that they're going to step up injection of medium and long-term capital into the market. Almost sounds like a plunge protection program that was rumored to be in effect over here years ago. Never really was, I don't think. He said that they're going to put the stable operation of the capital market in a more prominent position. It's gobbledygook, isn't it? And focus on stabilizing the market and confidence. And there are some.
You just do that by stop with the regulatory interference they've been having to this point,
Right.
whipsawing people.
Earlier, we had one of the Chinese stocks called Billy, which sounds like Ted Knight. Billy with his putter, right?
All right, big morning of earnings. We want to get you caught up with some of the key movers. Dow component Procter & Gamble slightly missing revenue estimates for its second quarter. The company earned $1.84 a share. Some investors still parsing whether that's fully comparable to analyst estimates. Procter & Gamble also affirming its full-year sales forecast. The CEO, John Mueller, joined us in the last hour.
Things are going very well from a consumer standpoint. As I mentioned, volumes strengthening. There are, of course, challenges in the world that we live in, but the team has done a great job executing our integrated growth strategy to overcome those challenges, and I expect the same will continue.
3M also reporting earnings, as Joe mentioned, for the fourth quarter. The company beating the street's profit expectations for the quarter, but revenue came in right about in line, maybe a little bit weaker. It's really the full-year guidance in the current quarter that fell shy of some expectations, and that's why you see that stock off by more than 7%. And Verizon beating fourth quarter profit and revenue estimates. The street also forecasting full-year profits ahead of expectations. Verizon was helped this past quarter by much stronger than expected growth in new postpaid wireless phone subscribers. That stock up by better than 4.5%.
Meantime, the first look at fourth quarter GDP hits a comment, and it's happening on Thursday. Ahead of that, Steve Leisman taking the pulse of some top Wall Street economists on what to expect. Steve, what are they telling you?
This is really interesting. Andrew, good morning. Economists surveyed in the CNBC Rapid Update. They've upgraded their outlook for the fourth quarter and the first, another upgrade in a string of upgrades. But they continue on average to forecast a growth slump that never seems to come. The 18 economists we surveyed see GDP at 1.9% in the fourth quarter, up 1.2 percentage points from the October look that we did, and rising 1.4% in this quarter, up almost a full percentage point from the prior outlook. And economists continue to forecast that the slump that never comes beginning in the second quarter, begins this time in the second quarter, where growth drops below 1%, you can see in that blue line, for 2 straight quarters. The coming slump has been a feature of the forecast for a couple of years now, where economists see growth slipping below potential or even into recession, but then they have to raise their outlook as the data come in better than expected. Of course, the average hides some differences. You can see here, Goldman no longer sees the slump. They forecast trend growth throughout the year, 1.9%. That's the blue line. Whereas economists at Citi, they look for, well, darn near a recession, seeing the next 2 quarters as sharply negative. Economists on average also lowered their outlook for inflation. Core PCE 2.7 for the fourth quarter, 0.7% percentage points lower than they had previously forecast. A sign of how inflation surprised both the Fed and the street to the downside in 2023. And you can see there that gradual decline over this year as it nears the Fed's 2% target next year. Hard to say why economists keep forecasting that 2-quarter slump in the quarters ahead and getting it wrong. Suffice to say, the economy, and specifically the consumer, continues to prove really resilient from those Fed rate hikes so far. Most important thing, Andrew, I think you've gotten richer being an optimist out there, though of course you can't guarantee that'll always be the case. Andrew?
Well, the question is, people have gotten richer, but some people haven't gotten richer when it comes, and then you got to outpace inflation at the same time. That's sort of the conundrum of all this, no?
I think that's a part of it, but as inflation has come down and you have returns in things like fixed income, returns in equities that have outpaced inflation, you have I think just done better in general, not betting in the first case on the end of the world, but just on better outcomes, I think, and I think that's where you've done better investment. I don't think one should play either the economy or the market, but remain regular in terms of their investments. I just think that if you get scared and you pull everything back, I think you've lost money along the way.
All right. Steve, thank you, sir. Appreciate it. We'll see how this impacts confidence and polls and votes and all of that as the year progresses.
Let's get specifically back to the markets, earnings. Thus far joining us is Lori Cavacina, head of U.S. equity strategy at RBC Capital Markets. You see a pretty good year, I think, Lori. Maybe not near term, but 8% total on the S&P by the end of the year.
Yeah, so we're at 5150, and we're trying to guess where the index is going to end up on December 31st, so it's a year-end number. And you know what's interesting is back in November, we had a 5,000 target that we set for this year. It was about a 10% return. So the anticipated return we're looking for is a little bit lower than we were a few months ago, primarily because of that big move we had in the fourth quarter. But, you know, our number's higher, and we have to mark our models, you know, to the market. But I think it's going to be a good year. I think we're going to make progress. You know, with an 8% return, I'm still one of the more bullish strategists out there, which is sort of an interesting factoid in and of itself.
But even though you would characterize sentiment as somewhat overdone, frothy right now, that explains the reason why we might see some near-term weakness.
Yeah, and I think it's important to distinguish how frothy sentiment is. So if you look at the AAII survey that comes out every week, and this is an oldie but a goodie, you know, it's popular for a reason. We've been about 1 standard deviation above the long-term average in terms of net bullishness. If you look where we were kind of starting in early December through about a week or so ago. If you look at a back test on what that means for performance over the next 12 months, you're typically flat in the S&P, I think a gain of about 0.7% on average, but you're still up about 6.5%. So I think that does a very good job of articulating sort of the short-term risk, but longer term, you can still get back on track. It's a different story if you're at 2 standard deviations. Then you're typically down over the next 12 months.
Looking under the hood, you point out that the drop in rates started the long-awaited broadening of the market in the breadth and through the small caps. But recently we've seen a backup in rates.
Yeah, it's really remarkable.
And it stopped, and we're back to the big caps again, right?
We did. I mean, you know, investors were complaining about whiplash and narrative to me last year, and we're really kind of hoping things would settle down and sort of stick with the trend. And we've gotten whiplashed once again, you know, as the new year has gotten underway, and everything that was sort of working that got people, frankly, really excited in the fourth quarter has just gone back to the same old, you know, sort of large cap concentrated top 7 names.
We can do, it's always fun to try to, you need a calculator, but we take an S&P total earnings for the year, and you were higher. You were at 244. Oh no, I'm sorry. Bottoms up consensus is at 244 to 245. You're not there. You're below. You're at 234. So if you put a multiple on that, It's interesting you're still at 8% for the year.
Yeah, and that's where, we're below consensus on earnings. We're not baking in profit margin expansion the way bottom-up consensus numbers are. That's a whole, other conversation. But on the multiple, we're actually above consensus.
Yeah.
So we've built a model going back to 1962. We bake in inflation, we use PCE, 10-year yields, Fed funds, and GDP. And we use that to basically forecast where the PE in trailing terms should be at the end of the year. That model spits out 23.2 times. I will tell you, Joe, that model last year was consistently pointing to 4,700 to 4,800 on the S&P, and a much higher multiple than a lot of people assumed.
No one saw that, yeah.
You're just analyzing the numbers and the trends and sentiment and putting it,
Yeah.
You're not getting carried away with anything. You're just looking at real.
People who like me, and not everybody likes me, by the way, but people who like me say, Lori, what we love about you is you're just all about the data.
Yeah.
So we let the data drive the narrative. And I'll tell you, this valuation study was fascinating. I'm a big believer that we're at the beginning of the post-COVID era of investing. And if you're just using post-GFC, pre-COVID rules to do your analysis, you're missing the boat. So our valuation model, what I really learned in doing that work is that in the 70s, inflation did a better job of explaining PEs than interest rates. And I think that's exactly what happened last year. GDP doesn't always do a great job of driving PEs, but we actually found when we were building the model, I didn't have GDP in there to begin with, but people kept asking me, plug in this number, plug in that number. They wanted to know if we stress it for certain GDP ranges, what would the multiple be? So I threw it in, and it actually helped the model a little bit, and we realized that last year you were actually seeing the fact that GDP, kind of going to Steve's conversation, the fact that it was recovering and coming in ahead of expectations, that was really helping support the multiple as well. So if you go back and look at history, you learn a lot of stuff that people missed last year.
It's interesting.
And it's election year. And you don't give a crap.
I care. I'm actually...
Not yet. You haven't decided yet. I just read the notes. That it's an election year, but people are asking you about it, but you don't really have a firm answer one way or another.
Well, no, we do have a firm answer.
do? Tell
So, what we've said, we have 5 different pieces of quantitative analysis that go into the 5150 target, and one of those is actually how the stock market behaves in presidential election years. It tends to be, based on when we run the data, about 7.5% return. And so we've told people stocks tend to be able to adapt to any political environment, right? But there is uncertainty that happens when the guard is changing. And if you look at the historical return, it's positive, but a little bit below trend. So this uncertainty always weighs on the market. We think that uncertainty is still in place right now. I have European and Canadian investors wanting to talk about almost nothing else but the election in my meetings. We try to save it for dessert if it's a dinner meeting, just so it doesn't derail the whole thing. U.S. investors haven't wanted to talk about it as much, but I will tell you the Iowa caucuses the day after, that is all that my incoming was about. So I think people are starting to look and think about sector trades, and we've said, it's really too early. We don't have a lot of policy yet to analyze, but people are starting to go there, not just overseas, but in the U.S.
See, you gave me some data on what happens during election years, but what I meant, you're not really saying one way or the other. But you are thinking about sectors based on who the eventual winner is? Is that?
Clients are asking me about it. I think it's too early to make big calls, but those calls are starting to come in.
Lori, I don't know about other people, but I like you. That's really straightforward.
I appreciate it. I like you guys
Thank
too.
you. Appreciate it.
Fine. Lori. Thank you. I'll take your record for likability.
When we come back, more of today's earnings movers. But next, what do the questions about those door plugs on the Boeing airplanes mean for the company's image and financial position? We're going to ask an aviation expert, and we'll talk to him about the things that Scott Kirby of United said earlier, too. Stay tuned. You're watching Squawk Box, and this is CNBC.
humanly possible.
The FAA recommending airlines check door plugs in the fuselages of Boeing 737-900ER planes that they are flying. This is part of the expanded scope and increased scrutiny following a door plug blowout on a different model earlier this month. More than 170 of those variants have been grounded. United Airlines now forecasting a first quarter loss because of that fact. The CEO, Scott Kirby, joined us in the last hour.
We're Boeing's biggest customer in the world. They're our biggest partner in the world. We need Boeing to succeed. And I have a lot of confidence in the people of Boeing. There's great mechanics, great engineers, great storied history. But they've been having these consistent manufacturing challenges, and they need to take action to get it. That's the point to Dave and to anyone, is it needs to be real action.
Joining us right now on the new wave of issues Boeing is facing is Mike Boyd. He's president and CEO of aviation consulting firm Boyd Group International. And Mike, I was pretty taken with what Scott Kirby was saying, because we just played a small snippet. He was talking a lot about how disappointed he is, how he thinks this latest move is just the straw that broke the camel's back, how they are now looking at other options, and he wouldn't rule out Airbus as another one of those options. What happened here? How serious is this for Boeing?
Well, I could sum it up in 2 words. Mr. Calhoun said it was a quality escape. What's that, like a wardrobe malfunction? You don't want to hear that from a CEO of a company that's putting out airplanes that aren't glued together properly. So I think the problem we have at United, which is a great airline, and they got to give it to Scott. He's making that airline move. But the point is they're wedded. I mean, we can go to Airbus. Airbus's dance card for narrow-body airplanes is booked till 2030. There's not a lot of room there, and they can't expand a whole lot. So they're wedded to Boeing, and Boeing has to get this act together, because now we're starting to talk about consumer confidence in the airplanes, and that has to be dealt with pretty quickly.
Kirby said the best case scenario, they are at least, Boeing, he said, 5 years behind on the MAX 10 schedule. That's the best case scenario. Airbus's dance card may be filled until 2030, but these airlines have to think long term, and I can't help but think that there aren't going to be repercussions where some of them want to say, okay, we need to be a little more varied. It reminds me a little of the supply chain problems you saw during COVID, where everybody said, hey, maybe we shouldn't be so reliant on China, even though it's the cheapest way to do it.
Well, there is no other option out there. Please, let's not mention Chinese airlines. Yes, yesterday's technology available today. So that's really the issue. But their production capacity, they're just trying to make it work. Boeing has to turn this around, because we are stuck with 2 major manufacturers, Airbus and Boeing. And Boeing with now the 900ER. Now keep in mind, United has 8% of its fleet grounded, 11% of its narrow-body fleet is grounded now. They have another 163 900ERs. If they start to monkey with them, now we have even bigger problems. And again, why is that? What is wrong with Boeing? What is inherently wrong with Boeing? It's got to get fixed, and it's more than an escape from quality.
What happened with Boeing? Because you're right. I mean, not only is so much of the airline infrastructure reliant on this. This is a huge point of pride for American manufacturing, very important for our exports. What happened?
Well, they got caught behind the curve. This is the second time it happened. I mean, years ago when United ordered the A320 the first time, that was back in the 90s, that scared the heck out of Boeing, because they had fallen behind in their airplanes. They had to redesign the airplane. They did the same thing with the MAX. Our friends at Airbus had to respond to what Bombardier was doing with a new airplane. They did. They bought the airplane. And Boeing just sat on his rear end, basically, and just said, we'll fix the 737. That has not worked out. Boeing really has not moved into the future. That's the problem.
Should consumers be concerned, or is this higher level profit ideas that are really at risk here? If you're flying, should you feel safe?
Well, look, we work with labor unions. Trust me, if a member of the Allied Pilots Association at American or ALPA or SWAP or one of those unions gets in the front of the airplane, I'll sit in the back and go, they're not going to fly anything that isn't unsafe. That's our bottom line.
That is excellent. That's excellent to hear. When we talked to Scott Kirby about it and just asked him if part of the problems were the idea that Boeing spun off Spirit, that does a lot of the work, aeronautics or whatever, that was a long time ago coming. They have a harder time controlling quality from a company that no longer reports directly to them. Is that a problem in the structure? Scott Kirby said he didn't know closely enough.
I would say it certainly is. If you don't own the company, keep in mind, Spirit Aerosystems is now doing work for a whole range of other people. We've worked with them. But the fact is they're not Boeing, and Boeing does not have direct control over them, but they should have direct control in terms of quality. Apparently they don't, with lawsuits being filed with several other issues with what's gone on at Spirit. Spirit maybe is falling behind the curve too, but the bottom line is Scott Kirby's writing a check to Boeing for, 100 -10s, and now they're going to be late. I suspect, you never know. He has a red pen on his desk too. He can put line through things, and maybe he can do a deal with Airbus. They do fly Airbuses, and they might be able to do a deal. Maybe buy Spirit and get 170 airplanes right now.
Mike, thank you for joining us, especially for making us feel safe about getting in the airwaves. You're right, in the airwaves. Nobody would do this. Nobody would fly these planes from those unions if they didn't feel safe in them.
Yes, ma'am.
Yes, so. All right, coming up, top side.
I believe it.
No, someone got on that Alaska Airlines.
That was before you knew. Now they're checking.
Right. Well, what else don't we know? Top stocks making moves in
in
the
which case you should never leave your house.
I know. I thought about that. In the pre-market later, we're going to speak with former SEC Chair Jay Clayton on ExxonMobil going to court to stop one of its own shareholders, from voting on a climate-related proposal. Squawk Box will be right back.
Skygo. Welcome back to Squawk Box. As we mentioned, it is a big morning for earnings. We're going to get over to Dom Chu, who's here to get us caught up on some of the big names. Dom.
All right, so Andrew, we'll start things off with a check on pharmaceutical and medical technology giant Johnson & Johnson. The Dow component right now is down fractionally, now down just marginally, about 0.1%, over 15,000 shares of volume. It reported better than expected profits and revenues, driven in part by stronger growth in its medical devices business. The outlook, though, a little bit more mixed. It was a slightly worse than expected full-year profit forecast on a slightly better than expected full-year revenue forecast. J&J CFO Joseph Wolk joined Squawk Box earlier this morning to add some more color and context to that outlook.
The near term, as well as the long term, looks very strong at Johnson & Johnson. I think this time last year when we spoke with investors, they had questions about our ability to power through the Stelara loss of exclusivity, Johnson & Johnson's largest product. Yet in December, we had a chance to explain to them just how robust our innovative medicine or pharmaceutical pipeline is, with 10 products having the potential for $5 billion in revenue on peak year sales.
All right, so we'll see if those shares can move beyond that 3% drop that they've seen over the last year. Turning now to industrials, General Electric shares are moving lower by roughly, call it 3.5%, now only about 1.5%, over 300,000 shares of volume. The now restructured industrial conglomerate is now focused on aerospace, power systems, renewable energy. It reported better than expected profits and revenues, helped along by continued strong demand for aircraft engines, parts, and services. But its first quarter profit forecast fell shy of estimates, hence some of the downside, but it's well off the pre-market lows, now only down about 1.75%. And then we'll cap things off with a check on housing. Shares of D.R. Horton are down about 5% right now, over 50,000 shares of volume. This is America's biggest publicly traded home builder by market value. It reported profits that missed estimates on better than expected revenues. D.R. Horton saw unit orders up 35% during that quarter, but pricing was lower year over year, as were profit margins. D.R. Horton did say that housing demand remains favorable. Remember, this is a stock that is up about 54% in just the last 3 months alone, and up roughly, you can see here, 56 or so percent over the last year. So keep an eye on those shares. Andrew, I'll send things back over to you.
Tom, thank you for that. Meantime, take a look at shares of Alibaba this morning. I want to tell you about a story that broke actually in DealBook just a little while ago, reporting that Jack Ma has been buying up shares of the company he founded, Alibaba. He's bought about $50 million in Hong Kong listed shares in recent months, and separately, Alibaba chairman Joe Tsai has bought about $151 million in U.S. listed Baba shares in the fourth quarter. That's according to a securities filing. Chinese stocks up across the board today, in large part maybe on the back of that, and also perhaps word that regulators will inject more capital into the markets. Of course, Jack Ma had appeared to be somewhat separated from the company. He remains on this sort of Alibaba partnership, a member of it, given his role founding the company. And for those who watch Jack Ma or try to keep a watch out for him, he was seen, first time in a very long time, at an NBA game in Paris, where Joe Tsai's Nets were playing against the Cavs just this month, wearing a Brooklyn Nets jersey and a hat, and he was sitting next to Joe Tsai and his wife. So,
I mean, you wonder if this ties back into the idea that Chinese regulators are letting up to some extent on tech companies and maybe relaxing some of the rules that they started grinding in.
Well, I think that's what maybe some of the news today about the regulators is suggestive of. I imagine that, and I don't want to speak for him because I don't know the answer, but I imagine Jack Ma and Joe Tsai
obviously
are looking at a company that is down something on the order of, I think, 40% year over year, and are saying there's a lot more value here, and somehow it's not being recognized by the market. We'll see, of course, how that all works out.
Last night?
Excuse me?
Joel?
I saw the clips, but I did not see the actual game live.
No, I did not last night.
70 points.
He's changing the NBA.
I had the under. No, I didn't.
Coming up, we'll be back. Inside today's GOP primary in New Hampshire, we're going to talk about what's at stake for voters, businesses, and investors. Stay tuned. You're watching Squawk.
I'll try.
Voting underway in the New Hampshire primary. Nikki Haley looking to hopefully, in at least as far as she's concerned, blunt some of the momentum that former President Trump gained in Iowa last week. Join us now to talk about the candidates' economic agendas and their chances today. Hoover Institution fellow Lanhee Chen served as policy director on Mitt Romney's presidential campaign, and Brookings Institution economic policy director Ben Harris. I'll just start with you, Lanhee. I saw in some of your notes that there is a lag effect for the economy, and perhaps, in your view, Biden's numbers on his handling of the economy between now and the election, you think that there's a chance that those start to improve because they should be better?
Yeah, I mean, certainly how people reflect how they feel about the economy should be better. I mean, we're still seeing a lot of measures of economic anxiety. I think people don't feel great about the economy, even though the measures objectively demonstrate an economy that's in a pretty good place. It's possible that voters will revise their assessments as we move toward the summer and fall. But, you know, there's some other measures that I think if you're the Biden campaign, you're worried about. You're worried about the fact that you have more Americans than ever since the pandemic working multiple jobs, for example. There are measures that you look at and you say, you know, you kind of understand why people don't feel so great about this economy. So their hope has to be that there is some impact on how people actually feel, because you can't tell people how to feel about the economy. They feel how they feel about the economy.
That's not stopping them from trying, Ben. I hear it every day with the guests that we have on that say, you don't know how you feel. And I always say, Ben, and you correct me if I'm wrong, if real wage gains didn't start growing until May of last year, so, you know, at least 2 years into the presidency, and if your buying power is still below where it was when President Biden took office, can't you feel that when you go to the grocery store, that prices are up 30%, my wages are not?
Yeah, so I'm glad you brought up inflation. I mean, inflation over 2023 outside of housing is below 2%. And Lonnie's right. I think that you start to see consumer confidence go up with a lag, and you saw a big boost over the past 2 months in terms of consumer confidence. It does feel like perceptions are changing around an economy. The labor market is still red hot and looks like it's in great shape. So while I agree that there are certain aspects of the economy that people should be concerned about, overall, between the labor market and calming inflation and continued economic growth, this is really a good news story, and you're starting to see that in the consumer sentiment.
Lanhee, you know, when it goes up in 2023, disinflation, it drops to plus 3%. It doesn't erase the 2022 and 2021 increases. I think that's part of the problem. If you look at total inflation in a lot of things you buy in the grocery, it's 30%. And people remember, 2.5, 3 years ago, wasn't that long ago. So if you go and your grocery bill is 30% more than it was, that's why people are feeling the way they feel.
Yeah, no, I think you're absolutely right. And, you know, I was in New Hampshire over the weekend and had a chance to talk to some people up there. And look, the point they make is, sure, you know, we're being told inflation's getting better, but it's not like that loaf of bread I'm paying, you know, $5 for now is going to be $4 tomorrow. The fact that it's $5.05 as opposed to $5.25 doesn't make me feel any better as a voter, right? So I do think that is the concern for the Biden team, is that even though the numbers do reflect that some of this is softening, you know, people feel how they feel, and they remember not that long ago, to your point, that things were not as expensive, and they naturally blame the incumbent for that.
Right. Hey, Ben, prior to the pandemic, people point out, and surprisingly, we were in Davos, we had Jamie Dimon on, who made the point that prior to the pandemic, Trump was growing the economy pretty well, and that certain things were successful. I think he viewed the tax cuts as successful, but you had real wage gains, big historic wage gains with very low inflation. Stock market went up at quite a bit since Election Day, which a lot of people didn't think, and the unemployment rate was at a similar, not quite as low as it is now, but historic gains in employment as well, all without inflation. Do you think that's part of the reason that this election might be close?
Yeah, that's a great question. So it's unclear whether or not voters are going to compare the state of the economy in 2024 to the state of the economy in 2020 and make a decision based on that, or whether or not they're going to make a decision based on the policy agenda of the candidates or potentially something else. I mean, you brought up the Trump tax cuts. From my view, the TCJA was a signature legislation passed by the Trump administration. It's interesting, if you go to the Trump website, there's no mention of the corporate tax cut. He brings up opportunity zones, which were 1/1000th of the overall cost of the bill, but doesn't talk about that signature tax cut. But I think that you're right to bring up that question. Will voters compare the Trump economy to the Biden economy, which I think is pretty similar, or will they compare their policy agendas, which could not be more different?
That's a mistake, Lonnie, but it doesn't surprise me with a populist. I would cut corporate tax rates to 0. So I would say it loud and say it proud. You can tax the individuals that work at the corporations. I mean, we're competing globally. Our corporations, are they not? Why don't we want them to succeed, Lonnie?
Well, look, Joe, this gets back to the challenge in the Republican Party, which is it's a different Republican Party now than even it was, 4 years ago. And the agenda of the Trump team is decidedly more populist. You see much more of that language. For many, many years, Republicans were making the point about fiscal responsibility, entitlement reform. You hear Nikki Haley talking about that. You don't hear Donald Trump talking about it because it's not a populist theme. A lot of people are not interested in entitlement reform in the electorate right now. So it reflects a shift in the Republican Party. It reflects a shift in sentiment amongst Republicans. But I think generally, if you look at a general election electorate looking toward November, I think the thought is, to take the most populist line you can. That doesn't put you in a bad place. And I think that's what the Trump team's been trying to do.
Okay. Gentlemen, thank you. Very good, Lonnie. And then we'll be talking again from now in November.
Still to come this morning, former SEC Chair Jay Clayton will join us right here on set. We've got a lot to talk about, including Exxon fighting back against investors pushing a vote on climate proposal. And we'll get his take on today's vote in New Hampshire. Squawk Box will be right back.
is.
Welcome back, Squawk Box. We got a lot to talk about with the former head of the SEC, Jay Clayton, in just a moment. Oil giant ExxonMobil going to court in an attempt to stop a shareholder vote later this year on a proposal that would see the company adopt tighter climate targets on a Scope 3. Exxon is the only Western oil major that doesn't set Scope 3 goals. For its part, the company saying the activist investors' repeated proposals don't serve shareholder interests. Meantime, Bernie Sanders now taking that CEO comp pay ratio and proposing a way to tax big companies that have a big gap between those two. Joining us right now to talk about all of it and more, former SEC Chair Jay Clayton. He is now Apollo Global Management's non-executive chair and a CNBC contributor. And I'm going to go actually to the Bernie Sanders of it all before we talk about the Exxon piece, because it is something that was just in the news literally overnight. There was some, and by the way, there was a big debate back when he first proposed this back in 2011 and 12. It was passed in 2013. And then there was a whole complaint for a long time that the SEC dragged its feet in implementing the rule, which was to create some transparency and disclosure around this ratio. Some people at the time had said, you know, it's not just about transparency. At some point, someone like a Bernie Sanders is going to come in and say, either tax them on it or use it in some other way. What do you think is going to happen?
What I think is going to happen,
Yes.
or what do I think about all
Both.
that? Okay, so what I think about all that is the critics are right. The commission during my tenure implemented the pay ratio rule, but let's not look at it in isolation. Look at it against the entire, what I would say is compensation disclosure package, which is really about, it's 30 pages, 40 pages, 20 pages in the proxy, really about how effective are compensation decisions. And somebody decided, let's reduce this to one metric relative to employee base.
Right.
That's a silly metric. It was never a metric that a serious return-oriented shareholder would use in order to allocate capital.
And mind you, from all the studies that
so we tried to do our best with it, but it was a political metric.
But one of the things I've been reading about, I mean, just in terms of studies, since the ratio has been implemented in terms of public disclosure, it has done nothing to actually reduce the ratio between the highest paid person in the company and the bottom paid person. In fact, that's only gotten wider. What do you make of that?
Because for any serious shareholder, serious institutional shareholders who dig into pay packages, alignment and the like, it's just not a relevant metric.
Do you, okay, and then I want to go to the climate piece of this. Do you think that pay at the top level for the CEO and the like is market-based?
Do I think that pay is market-based?
Pay is so I'll tell you why I'm asking the question. If I'm going to go hire somebody tomorrow to work for me, typically I want to pay them enough to incentivize them to come work for me.
Sure.
For them to do a good job in the job, but not more than I would otherwise have to in any other capacity.
Okay.
Right? But that's how a normal person thinks about how to hire someone to pay them. Okay. In the context of CEOs, and CEOs in particular, it is not clear to me, if we were to go down the list of the CEO pay of the top 50 people in America today, it is not clear to me that there is some other job available to them that would pay them more. Like even
Do you
close.
think Elon Musk makes so much?
Okay, let me respond to that. Because it's one way
there's
to
a
look
real
at it.
question. There's no market for these people, and that it's all some kind of club. That's the argument.
Okay, that's a like interesting argument.
Yep.
But it's like having a center on a basketball team.
Okay.
You have a great center on the basketball team. You're paying them to get them there. What if they leave? How much are you going to have to pay Joel Embiid? Last night, how much do you have to pay
basketball?
to replace him?
That's a true market. That Joel, there's a market for him, and there are other teams that would pay more for him.
There's a market for CEOs.
What about for like Elon Musk? Because he doesn't fit into that paradigm.
Totally, it's a very interesting question.
I think that company is entirely reliant.
It's a very interesting question. I don't know the answer.
You're asking a lot of questions, but you're missing one, which is you have somebody who's functioning really well.
Yep.
Okay.
Okay.
What is it going to take to find somebody who?
There's a risk premium, of course.
Gigantic.
Yeah.
I mean, look, you have people on these shows.
I'm just saying that most people in America, the reason why they look at CEOs and their pay packages, unlike a basketball player or baseball player, where you can see that there's a market. I can tell you, Michael Jordan, I would argue, deserves every cent he's ever been paid, and probably deserves more. You can see every shoe that's sold. I mean, it's very easy to do with
Jennifer Lawrence. Can you do it with?
Absolutely, because if the money, either the movies,
I think you know the answer.
Either the movie makes money or it doesn't make money.
I think the answer is there are some old boy networks still around where guys are overpaid and they stink, and then there are other CEOs that are even underpaid for how good they are.
Let me give
and you can see what's happening at Boeing right now.
You're looking at this as a spot market. It's not a spot market. There are phases of being a CEO. When you come into the job of one of these large multinational companies, no matter how many jobs you've had, it takes a year or two to get your sea legs. And then you're performing and directing the company in the direction you see, understanding all the things. To think of that as a spot market is...
I wouldn't think of it as a spot market. I think of it this way. And I won't name names. There have been people who've gone from, let's say, the COO or CFO to the CEO, okay, in their respective roles, where they're getting paid $2, $3, $4 million a year in the COO or CFO role, okay? And then all of a sudden they get to the CEO role 12 months later. And all of a sudden, the number is $22 million or $25 million. And it's not clear to me that there is some other company in America that wants to pay said person $25 million.
Look, we can debate the gross amount, but let me talk about that step up. Let's say that what you're looking for is an internal candidate at a company. You want that carrot to be there to keep those people in that job.
Agreed.
So that step up.
Assuming that they're not going to go work with you at Apollo, where you could make $20 million, by the way. So there are places where you can make a lot of money. The question is, can you make that much money? And that's the question.
As an investor, I want to see the very best compete to become the leader of the company, and then I want to see them long-term aligned with the shareholders.
I mean, do you think a really good CEO can be just as good at what he's... I don't think you think any of them are that great. It can be just as good as what he's doing as a really good left-hander, where you need to be able to start in your starting rotation. Those guys make $80 million a year. Don't you think it's possible a CEO that runs a business so well, no screw up, makes thousands of decisions every day, employees counting on him, customers
counting on him? I think there's some great CEOs in the world. By the way,
you don't think anyone else would hire?
Founders are a very different story, by the way. That's the other thing I was going to say.
Well, founders usually stock.
Use it stock.
I think the bigger issue is it's got to be tied to performance, right? And that's where I think the questions lie. If you are doing well while your shareholders are doing well and your employees seem happy, then that's pay for performance. But a lot of this is the stock compensation plans that it depends.
Look, I love people that are...
Oh, God, they're really arguing about wages again. I agree, they do pay too much. I can make the same decisions and take a third of what they get, maybe an eighth. I'd be totally happy, but I'll be right back. Okay. But that's what I get for listening to CNBC. I gotta listen to their politics. SPY bounced up. Someone said an alert. Well, why did I put that there? Oh, that's from the Head and Shoulders. Yeah, that's pretty choppy yesterday. Even on the 5-minute, it's not really that clear. Not even on the 15-minute, it's not that clear. That's strange. So today's volume's DWAC. And it's under my support level, so we could pull back a little bit more. We got K-Web on here. Florence said that they have a stimulus package in China. There's Tesla moving a little bit. PLTR, yep. Sophie should be down a little bit. No, double top on Sophie. Mara came close to my support. See, this gets me about Sorkin on CNBC. He made a movie a while back. He got millions for making that move, for just writing a book about Wall Street.
For the economy, because you feel like, okay, take the Fed out of the equation here?
Absolutely, and I think that's where it's going to be kind of sectors and stocks that you have to pick on. So think of, healthcare, energy, utilities.
There we go with that
come
again.
Down because now the market's saying, hey, maybe rates don't come down. But if they have strong earnings or they just keep up with earnings expectations, you could see multiples expand in those areas.
My opinion, earnings haven't been that good so far. But
It could be up. Doesn't necessarily mean the S&P will go up, but it means equal weighted S&P could go up, or the selective other indexes could go up as well.
So what are you buying as a result?
So I like some of the utilities like AES. I think in healthcare, today you had J&J, Glaxo, energy. I think the big integrateds are cheap, such as Chevron and Exxon. And then select industrials and financials. I think, valuation is going to be really important. Not to say I don't own the Mag 7. I think you still have to be in there. It's just a question of how much do you want to own of those, especially with the expectations built in. They have to really have really good earnings and actually increase their expectations.
Okay, so Rat, thank you. Always great to see you.
Thanks,
Let's take a very quick final check on the markets this morning. You'll see right now that the futures, about a half an hour to go from the opening bell, futures are looking for slightly lower open when it comes to the Dow, off by about 30 points. S&P futures are up by 7.5. The NASDAQ up by about 50. It's a little bit of movement from where we started. We did get a flood of earnings that came in, and you've got the 10-year now yielding well above 4.1%. The 2-year sitting right at 4.4%. We watched Bitcoin earlier. It was back at around 38,000 and change. Not sure where it is right now, but WTI is coming off its highest level that we've seen since December 26th.
What?
That does it for us today. We will be right back here tomorrow. Right now, you guys stick around for Squawk on the Street. They've
Bye,
got the rock.
Becky.
We'll see you later.
I love you. Don't leave.
Good Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Pre-markets trying to get some traction as this early round of industrial Q4 earnings have either revenue or guidance on the light
Spirit
side.
Airlines got 170 planes.
Netflix reports tonight. Our roadmap begins with the market's historic run, including the Dow's first close above 38K.
I guess that could be good news.
J&J, Verizon, and Procter & Gamble are all leading today's earnings parade. We've got plenty of them. We're going to break down the winners and the losers. Also,
Damn it, Sava.
is said to be weighing measures to prop up its sagging stock markets. If you haven't watched, the Shanghai Composite already down about 7% this year, but is rebounding a bit.
Prop up. Why don't you just say take advantage of the bargains that are being offered by people who are selling?
There you go.
Why don't you get the PCR language? What do you come with? Some sort of like right-wing description?
I'll make sure to check in with my communist handlers next time.
Now you're talking, Jack Ma.
I'm going to get to all the earnings movers in a moment. First, though, as Becky said, coming up this hour, actor, producer, entrepreneur Dwayne Johnson's with us, is set to ring the opening bell after being appointed to the board of WWE and UFC parent TKO. He'll join us live this hour, along with TKO CEO Ari Emanuel. There's a lot of news in here, David. Netflix is a big part of it.
That's the biggest part of it by far, and that's the reason the stock is up so dramatically at TKO this morning. That's also going to have an impact, as you might imagine, on Endeavor, which owns, remember, majority stake in TKO. But this Netflix deal, according to filings again, over $5 billion over 10 years. That's a number, guys, that was in excess of what many investors were anticipating. And of course, for Netflix, earnings of which we're not far from getting. It's an interesting move as well. Live events, which they have had very few of, but it certainly will raise the prospect yet again that are they going to get deeper into sports? You know, this sort of falls in between sports and entertainment. It's both, but will they get into live sports even more?
Look, I know from talking to Strauss Zelnick, who's got the video games for WWE. This is huge, and he never accused me of being a snob, because I don't go to Long Island where I see it. But it does remind me that the number of people who love this sport is so in excess of what Wall Street thinks it is that I've conceded that I am a bit of a lacking in knowledge. I don't want to call myself a snob because he says, listen, let's go to a guy. It sounds like it's interesting, but it's rabid. The people are rabid.
No, they have
TKO.
Fan base is an interesting one, perhaps.
Nice bounce.
Well. And again, Carl, they
WWE.
outside the U.S. as well, that there are a lot of rights that come along with this. So an interesting move from Netflix, and as we said, the dollar numbers do seem to be in excess of what had been anticipated for this renewal of Raw.
We'll talk about what it means for entertainment, the cable bundle. Of course, Oscar noms are out this morning as well. But a bunch of earnings movers to get to today, including results from industrial giants 3M, RTX, GE. We got United in there too. Jim, what strikes you as the most interesting this morning?
I actually thought the Procter & Gamble margins were incredible, and I've been waiting for this
PG.
to happen. I'm waiting for the margin explosion, and we did get it. I mean, if you remember the previous call, they were talking about how the dollar's going to so offset the margin expansion that you wouldn't even notice it. Not true. And now the other side is that, well, I don't know what happened to beauty. I mean, people just don't want to be beautiful anymore, is what you look at it. But or they want to be beauty with using e.l.f. because that does well. But I do think that the gross margins have been something I've been disappointed. I mean, it's 6 straight quarters of them beating the street. I think people are going to start noticing, you know what, Procter's really well run, and they're taking care of business.
Mueller, of course, on Squawk this morning, said he just got back from China a couple weeks ago.
Still not good.
Where it is tough.
Yeah.
China down 15.
I know, and I think that there are people who say, well, I got to sell for that. But I think it's one of the most telegraphed Chinese doing badly story. That this is one, David, you know, this is like a better than feared. I mean, there are a lot of people who feel they're going to blow it again. They're going to talk about margins being not that great. They're going to talk about Argentina. What they do is they try to find a country that's not doing well, and they emphasize it. Well, you know what? The Uruguay numbers, people aren't. Turns out they're not using Gillette. I mean, I have been critical of management here because they find that Kazakhstan's been a problem, and I'm tired of that. What? They had a big IPO front in Kazakhstan.
Yes, they did.
They did.
Yeah.
Yeah, yeah, Borat covered the whole thing, I think. No, because actually had a giant, and they had I'm just saying that Procter seemed to be, at least in the interview with Squawk, finally getting a little more upbeat about the amazing business that they have. And it was getting upsetting to me. David Taylor would emphasize what was good. Mueller seems to emphasize what's bad, and I think he's got to flip that, right? I mean, he just got to flip it.
Well, he did say price up for volume flat. He said we're going to have to get some volume at some point. It's going to be part of the equation.
You know, there was another instance where no one has volume, and he's got flat volume, and that's a big win versus, say, a ConAgra. But again, I mean, he is a glass half empty guy if I've ever seen one, and it's rather extraordinary. And I just think it's time. I usually don't say this, but it's time for him to get a pep talk.
All right, well, pep talk there. Let's talk GE a little bit. Stocks gonna be down a little bit.
No, but it was down 4. And what are people doing? They're not speaking to Larry?
I don't know, Jim.
They're not speaking to Larry. They're speaking to who are they speaking to?
I don't know who they're speaking to.
I don't either.
The stock has had an immense run, as we pointed out many times. Larry Culp really hit his stride, let's call it a year and a half or so ago.
Let's call it.
But now expectations seem to be a bit higher, and perhaps they came in. I think Q4 free cash flow came in line. People may have been anticipating a beat because that's been the way things have gone lately, and even the guidance sort of seems to be somewhat underwhelming for 24. So,
well, he's got to do the split off. The service revenue is what I look at. The service revenue is extraordinary. But you know the problem is, David.
What is the problem, Jim?
Inflation. Still have inflation problems. I mean, I can't believe it. They still can't find the workers. They still can't get the materials. So, I mean, it's funny because when you speak to the management, one of the first things they say is, like, hey, what's the Fed thinking with the 5 cuts? Which, of course, is the actual Goldman thinking what the Fed might do. 5 cuts. I mean, they can't. They're still paying up for everything. Now, unless you can say, well, listen, that's not what we're talking about. We're talking about the supermarket. But I think that planes are a part of our travel's part of the CPI, and these things aren't coming in. By the way, they're not coming in for RTX either.
No.
Can't find enough engineers. Can't.
We're going to talk more about that. You're going to stick around for part of the 10 a.m.
Oh, man, I'm taking over the 10 a.m. I mean, enough already. It's a Kramer hour, not the Eisenhower.
Really?
Oh, Eisenhower, what a great president. What?
A long time ago.
He was also president.
Warned about that.
He was president of Columbia University.
He warned about the.
That goodbye speech was good, very short.
Yeah.
He was president of Columbia University, and we didn't know if he was Republican or Democrat. Not unlike Dean Phillips, who's running tomorrow. If he gets 4%, then today. If he gets 4%,
have you listened to Dean Phillips rallies in New Hampshire at all? Have you? I've actually been listening to him.
I mean,
he's very articulate.
He is articulate.
Very.
I find Kurt Anderson in Atlantic was very articulate about Bill Ackman.
Well, that may have been the case as well. But Dean Phillips, yeah, he's probably not gonna beat Biden.
If he gets 1%, it's a big win. You don't understand the way it works.
Biden's not even on the ballot in New Hampshire. They got to have him written in, but Dean Phillips is. But of course, the DNC is keeping him from the ballot in a lot of other states.
I campaigned for Gary Hart in 1984, and the word was, listen, we don't care what number we get. It's a huge win. That was like, at 7 o'clock. It's a huge win, Jim. Well, no, I mean, don't we care about how? No! The results don't matter, you idiot. This is when I first learned that you want the facts get in the way of a good story.
Don't take my line.
We'll keep a close eye on Dean Phillips. Meanwhile,
he took my line.
Whether it's a win or not, they beat 2020. Their guidance.
He took my line.
2024 free cash flow does seem to be ahead. We'll have an opportunity
Disney.
to Greg Hayes in the 10 o'clock.
96 is coming.
Okay, come on. You want to know the missing thing that you haven't mentioned why that stock is really up?
Why?
Because the GTF, the engine.
Yeah, what
looks
about
like the problems are much less than expected.
Not for Spirit Airlines, they're not.
Spirit's still in the sky?
Yeah, they're still in the sky. Actually, that stock has come back a good amount.
Oh, yeah,
1, 2, 3.
People believe that they're
You
going to
can't with me.
But
hire a lawyer.
No change to the GTF replacement plan.
Well, that's what I'm saying.
Yeah.
People thought it might go up to $4 billion. It turns out to be less.
I don't have GE on here, I don't think.
The F-35 is doing great. Black box, we don't know. We can't get a handle on it. But I will say that this is Greg Hayes' last quarter, and he's going out on a high, not a low.
We're going to talk about what United said about the MAX 10 in a little bit, though. We want to turn to China, though, this morning. Reportedly now considering a rescue package backed by some offshore money to help the country's struggling stock market. Jim, we know what the FXI has done. We got these reports in the Times about Jack Ma buying some BABA.
Yeah, look, this is what happens. These stories are for Americans. There'll be people who come out today who have a lot at stake because China does a huge number of underwritings, usually about 1/5 of underwritings, and they're going to say, this is your chance, you got to buy, and it's going to work. It always works because we're suckers for the PRC. We believe the PRC is all powerful. I guess we think that the PRC is saying taking them all up. I know that they're dismayed that they're down as much as Japan is up. But David, the traditional strategy is to fool America, get them to buy stock, and then slam them in the face, which is not what Joe and Lai did. That's much more of what a Mao might have done had Mao been interested in the stock market.
Okay. All perhaps true. Reports this morning, in case people missed it, have been citing the fact that Chinese authorities are aiming to get, let's call it, 278 billion, roughly, through offshore accounts of Chinese state-owned companies to invest in the domestic market.
There's a 700 billion whisper number out there.
700 billion?
Yeah, that's what's really driving it. Yeah, 700 billion whisper number. Wow. I mean, I got the whisper number before I got the real number.
Whew. We must take powerful and effective measures to stabilize the market and confidence. That's Chinese Premier Li Qiang said during a state council meeting, rolling out measures again to stabilize what has been a very poorly performing stock market
do it
for some
futures,
time.
individual stocks. What do you think they're going to do?
I don't know what they're going to do, Jim.
Take 5% of, I don't know, of BABA. Get that Shein deal going. Remember you buy some
It can help
Shein?
to a certain extent, but we talk often, almost every day, about the state of, as you see, Jack Ma buying more Alibaba, which has fallen far below its IPO price. But we talk about the state of the Chinese economy. The consumer's not doing particularly well. The property sector continues to be a complete mess. There is expectations that housing markets are going to continue to decline, and home prices are going to continue to decline for the next couple of years. You've got deflation overall is a real concern there, and so it goes on and on.
You know,
Baba, I got 73.36 to break, and if we do that, I think she'll go to 76. The support level for the pullback is right around 71.15 for now. Now they've done this stimulus thing before, over and 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 over. They did stop short selling. Also, China's problem is that Xpeng, whatever his name is ain't a very good communicator, and they spied on us. But Biden's in bed with them. So the way the Democrats work, they're gonna jump on this. The Wall Street's kind of dependent on Japan in a way, but we got mixed messages yesterday. It's not good to invest in a communist country, but I haven't traded Japan hardly any at all. Nile, XPEV, and BABA is about an LI and JD, and so I haven't really traded a lot of China. I just stick with the American. Wait for the pullbacks and wait for the count of three. BABA had a 1, 2, 3 here. Should have took opportunity of that yesterday. I knew they were going to talk. They were talking kind of semi about stimulus. 285 billion ain't really that much for China, but it is a start. They don't like doing it that much, not like we do. We've done it for years, and we're still printing money. We printed $6 trillion here in the last 3 years. I mean, think of 285 billion and then think about 6 trillion in 3 years. Plus the other 4 or 5 trillion before that during COVID. And then you got the 6 trillion that Obama printed. All for sharing the wealth. And it doesn't work. It's trickled down economics. When you print the money like that, there's no other ifs, ands, or buts about it. LI, JD, K-Web. K-Web's took a pretty good bite. Big old, almost hit my support level on K-Web. I was just 30-some cents off, 33. So the target would be the bottom of the 1, 2, 3. Then you got JD. And I mean Baba. Jack Ma bought some Baba. That's a pretty good sign that he's going to make another billions and billions of dollars. Baba's took a big hit. I used to love trading this stock. And this was my favorite one, Baba was. And it's way undervalued. I mean, the IPO is like $90-some. I can see it going back there in 2024, but heard Israel might stop fighting for a couple months if they hurry up and give them back the hostages, if they're still alive. Netflix got earnings coming out. Heard the subscriptions are going to be good. It's already popped today off that news. And that's the same with AMC. See, AMC is going to have to get into the streaming. Change the whole network, the whole situation around. I mean, they're pumping this stock right now. It's going to, but the movies are just horrible. That Cinderella movie came out was just a flop. They're boasting about popcorn. AMC popcorn in the stores now. I love the popcorn. And I don't eat popcorn much. I think that's the last time I've had popcorn was, oh heck, 4 or 5 years ago. I just don't like popcorn. But I'll go eat it at the movie theater. I don't have sugar in the house either. My sister thinks that's weird because I don't have sugar. She comes over and she wants coffee and creamer and sugar. So, nor have I drunk soda pop. I don't drink soda pop. I get funny looks because I tell people, you don't drink soda pop? I'm the only one in the family that doesn't drink it. I mean, hoards it. They got to have a soda pop. They got to have a big gulp. It just, every time I drink soda pop, it gives me heartburn. I don't enjoy it. Comcast, C-O-M-S-A. I got 10 more minutes. Yesterday was a good day for me coming out of the gate. Looks to me like the QQQ might be tradable today. Right off the bat. We're pulled back to support level on the SPY off the 200. I just feel like with these Magnificent Seven stocks that it's just, it needs to be spread out somewhere. It's just too much. But so I'll just keep trading the way I am. And I swing NVIDIA and got out of NVIDIA. IBM. Popcorn. Hello, Randy. Hello, Mike. Hope you're having a good day, buddy. Procter & Gamble had some good news, good earnings. I think Netflix will be good too. They keep saying they're number one, that they're the boss. Johnson & Johnson came out with earnings. They'll pull back to the bottom of the Darvis box. We've been in the 3-week Darvis box right here. Boeing, I called the bottom at 298. We hit the top of the channel on Boeing. NVIDIA breaks 600. I think we're going to start moving up higher to 623 and 640. I got some slack. Tesla's earnings are coming out tomorrow after hours. I think we'll get a pop on this one because we've had the drop. See how we trade BABA today. If I get it at 71, 71.13. I'm going to go get me some coffee and I'll be right back. So we'll see if we bounce off the 200. I think I'll do the SPY first thing. Where's my platform? There we go. The 24th, the 484 strike. Maybe the 483, but definitely the 484. start off with 5. Oh, mama. They're talking about 36,000 on Bitcoin for support, and that's probably where I'll jump in my ETFs. 36,000. And I have 32 for a strong buy. We definitely broke it. Damn it, why you do that so soon? You're jumping the gate on me. So we got the 21. And we got to try to break the 50 on the SPY. If it hits the 50, it'll pull back to the 21. We get the 9 cross the 21, and we'll run it on up to the double top. But I don't like how it broke out right now. Could have waited for me. And if I have to drop it down, it'd be the 285. So I'm going to put that in here, plus the 285, slash 285. Or 485. And we're going to be opening in a minute. Hello, YouTubers. This is a bull flag. And I might be looking at the SPX. Here we go. I don't have my moving averages on there. Okay, there we pulled back to the 9, just as planned. Dang gimmit. So we go to the 285. There we go, we're dropping down now. Got an indecisive candle. It's a scalp. You got to be careful here. You got to let it do its thing. We're back to the 200 now. This has got to hold right here. Nvidia's pulled back to a double bottom. Lily. And Nvidia also has pulled back to a double bottom, a little bit lower than low. She's pulling back hard. Okay, I got 91. Just remember, we've had a real good run here. At 91 and 106. Maybe this stimulus package is going to make these stock guys nervous a little bit. You got PHUN and DWAC. The biggest loser today is Mera, GE, Johnson & Johnson, AMD. The biggest winners on my list is Baba, Baidu, K-Web, First Solar, and BYDDF, China. I got a 98 average on SPY. AMC's moving a little bit. Now it got to 481 yesterday and pulled back hard. So we're going to try to double top that. We got a hammer on the SPX and on the SPY. Go get my coffee and I'll be right back. Well, I better hold on to this. I'm even right now. Got to think about what that China stimulus package is going to do.
China.
China. The Reddick bunch gets a hold of AMC, might take it to 5. Okay, we're at 108. Now we're at a double top. So this is where I like to scale out. Take your profit. Come on, baby.
Give us some of the numbers behind this. The filing said over $5 billion over 10 years. Correct. A lot of debate amongst investors how much that's a multiple to your current deal. What can you tell them right now in terms of, from monetary perspective, how significant this is and how much of an improvement it is over the previous deal?
Well, all I say is that we are in line with the market's expectations of where our step up would be. And the only other thing I would say is it's Netflix. They're the global leader. They're the best company with regard to sports entertainment. Whether they've done it with Formula One, whether they've done it with Tour de France.
Netflix, nice little pullback on this to the first deviation line.
Are they going to move more strongly into live? Is this another sign of that?
Mike?
Them post-close. And
We will, but you have a sense of that. You just negotiated with them.
Here comes the
I think
AMC
this is
knife.
An important step for them in their AVOD service and in their subscription service. So I think live is important for them. Yes.
Now you said this was in line with expectations, but clearly not. I mean, the stock's up 23%.
I think the word Netflix is actually very important for this. And
Now we're flagging out here.
With Raw, it's a big deal.
And they get a lot as well outside the U.S. Tell us a bit more about that.
Well, they get the PLEs, they get SmackDown. They're the global leader in SVOD. So for us, it kind of just strengthens the brand on a global basis with that relationship.
So you have Peacock domestically for the WWE Network.
Correct.
That goes until March of 26.
Oh, that's good.
UFC still, ESPN domestically through the end
Peacock?
of 25. Correct. And now you got this deal done as well.
Yeah.
And you got SmackDown, that was done also.
We did SmackDown. We moved it from Fox to NBC.
Right.
Right. And then we moved also NXT to CW.
Okay, so you're done for now.
Never.
I'm gonna go for Nvidia.
Board member says, yeah. He's putting the strains on me, but it's understandable. We got to we got to integrate a lot of stuff, as we've said, and do all the kind of. We've done that on our marketing side, on our sponsorship side. So, yeah, we still got a lot of work to do.
Dwayne, congratulations on the board seat. You talked a lot about what a testament it is to your dad and your grandfather.
Right.
What is that? I mean, it's unprecedented what you've done from becoming an athlete performer to this.
Thank you. It has been unprecedented, and I think this move for us,
The Rock.
Ari certainly knows this. My grandfather wrestled in the WWE back when it was the WWF here in New York. My dad wrestled, and then here I come along. And I like to say that my grandfather, my dad, they never would have thought that something like this would happen. In that, I was able to sit at this table now, and that is a table that they helped build. So I do want to take a moment just to acknowledge this guy. There's no CEO in the world like this guy. We've known each other for 20 years. We've done a lot of big business together, and this is why you're seeing I think these game-changing deals that he's making is a reflection, I think, of who he is. And when it comes to Netflix,
Bullshit.
Absolutely. When it comes to Netflix, I'm excited about it too. 52 weeks live. That's a lot of Rock raising the eyebrow every week for Netflix. So we're excited.
Well, Dwayne, I got again congratulations on all your success.
Thank you, Jim. You gave me a book years ago, by the way.
Yes, I did.
I appreciate that. I forgot that. You signed it to me. Thank you.
You are a fabulous business person, and you know many great things, including the stock market.
Can you smell what The Rock is cooking?
Spring football is a fabulous thing because, as you say, these are guys who play for dinner. We have too many players out on the field who don't play for dinner, and when it gets time, they say for who, for what. When they don't have to tackle, they walk away. You are seeing some tremendous success. Players going from there to the big leagues. So I want to know, what's the percentage? Are these guys who otherwise might just be doing absolutely nothing because they're thrown away after they get cut? This is a way for these young men to have a second career.
That's right, Jim. It's a great opportunity for these players. I always like to say, as you guys know, there's 53 men in an NFL roster. I was always number 54. DJ, you're good, but if you had a little bit more time and experience, you might make it, but this is where your dream ends. Well, then in comes the XFL, in comes the USFL, then we wind up merging to make the UFL, creating these opportunities for these players. And you know what's interesting, what we have found, Nari knows this as he's come to these games, you find that these guys, when they lace up their cleats, put the helmet on, they put their hands in the dirt, the reason why they play and the reason why they leave it all on the field just becomes a different thing. They may not be making the $40, $50, $100 million deals, but like you said, they're playing for their families, they're playing to eat, and that's a different kind of hunger.
And that's why I love watching them. And I always root for certain guys. I like daily fantasy, so I can put with DraftKings, so I can bet on who's going to do well because I like to do that during the pro season. I also want to compliment you. I owned a bar San Miguel. I had to give it up because my wife created a mezcal.
Save.
Terramana was the first company that actually treated me like an important person. A small bar in Mexico, a Mexican restaurant. And I don't know whether these people, you've instructed them to treat small business people equal to large business people, but you were graceful and gracious. And so you've instructed people, and that's winning.
Well, it's very important. Thank you for saying that. It's very important. It's just like how we run our businesses. The business is a reflection of its founders. And in this case with Terramana, we wanted to build a tequila company that hopefully would make some impact. We wound up shattering all records in the tequila business space in that category, which has been wonderful, but also do it with some humility and do it with the second part of the word Terramana, which is mana. And that spirit that comes from in here. So thank you for acknowledging that. I appreciate it.
Carl,
they're all fired, by the way. The ones that
I had a cutout, a life-size cutout of you in front, and I crushed it. And you know who you crushed?
Who's that?
Clooney.
I think he did okay too.
He did okay too, yes.
You know, part of this deal is you take.
So we got a symmetrical flag on the 5 minute.
I'm just curious what that actually
on
means.
Spy.
The Rock, by the way, the Rock name, so to speak. What does that allow for? What does that mean?
Well, there's the business side of that, as we know.
DWAC is getting whacked.
But also, it goes much deeper than that. And this idea, the name of the Rock, for me, I owe that name everything. Without that name, there would be no.
Can you smell what the washboard is cooking?
But also, that name was a derivative name of my dad, Rocky Johnson, who was the first black tag team champions in WWE, trailblazer, paved the way, man of color, for a kid like me to be embraced in a bigger way when I came along. And so.
You know what? You're full of crap, Rock. I'll take you on any day of the week. I promise you. You smell what the washboard is cooking. I'm in Netflix. After what you did to Lahaina, I will eat you up and spit you out. That idiot that badmouthed me on Tesla, hey buddy, we're up. Hey, now the video's at 595. So far, we're kind of looking bearish on the SPY. We got to break the 50. We got a symmetrical flag on the SPX 123B. There we go. Symmetrical flag out of the gate. 1, 2, 3. Break it. The QQQ is at the 200 on the 1 minute. A little pullback here on Tesla. Lilly is to 619.68. CNBC hasn't mentioned this stock in a week and it's done nothing but fall. So that's why sometimes I listen to these idiots on there. Oh, there we go, 610 on the video. So we got a double bottom here. But around 615 for Lilly. Now I'm up $100 a contract here on NVIDIA. We're finding some resistance at the 51 EMA. The 9 did cross the 21. We do have a hammer, a couple hammers, so we can continue maybe Depends on this next candle. You can take profit, but I think this is going to be a good trade. I'm going to see how far we're up before I make it final. Well, damn it, we're up pretty good. Could be priced in. Let's take profit. I'm going to take profit on NVIDIA. I mean, fuck, Netflix. Excuse me. Damn, what'd I do? Oh, man. I put NVIDIA. How in the heck did I do that? Oh, my God. I just keyed in the wrong number. That's NVIDIA. Shit. Damn it. How did I do that? Dadgummit. Well, that's winter anyway. How did I do that? I'm back to my old days here. Oh, dadgummit. That's what you get for having 2 or 3 platforms up. Shit. Both of them worked. I just traded. Damn. Okay. Call me an idiot. That really pisses me off. How did I do it? Oh well. SPY broke the 50. That YouTube, that's a NVIDIA call in there, not a Netflix. They both went up, but still yet. Stupid. Now it's at $7. So this is called a wedge. You got the snake, it breaks out, creates a wedge. And that's when I got in the trade, and I got into NVIDIA instead. It's a pretty simple strategy. Just let it break out, let it pull back, then let it create its pattern. And in this case, this is called a falling wedge or a symmetrical flag. They're both a bull flag. And we'll see how NVIDIA played out because I didn't even want to trade this. Yeah, I don't know what to call this. A hammer out of a snake. Breakout. Pull back. Looks to me like an inverse head and shoulders with a tweezer bottom. And that's on the 1 minute. Inverse head and shoulders. 3 black crows. Breaks out with a hammer. And it could almost be a wedge, a flag of some sort. So you want to wait for it to pull back. AMC pulled back a little bit. It seems like it's got some mustard today. The pump stations will be pumping this real hard. I know how these fellas work. I personally just scalp it, but so we broke out of the snake here, and we're starting to see some higher lows. $5, $4.91. I got $4.91 target on this thing when I charted it up the other day. And I did a video on it. It's headline driven right now. It has nothing to do with the fundamentals. They're going to try to buff it up a little bit. Man, there it goes in the video. Lily will be one to pop too, because they pumped that thing real hard for 2 or 3 weeks. And they'll start in again once it pulls back to a certain support level. Remember how they pumped it? It's the best thing in the world. They had nothing else to pump at the time. Damn, look at the video, 7:10. I got out at 6:45. We're about to hit resistance level. We got a double top at open price. So it should pull back right here. Maybe back to this here support level and then take it and run it back up. I like to just draw a line straight across and not have no leverage on it. Now this thing should pull back here. We got an inverse head and shoulders also. So they could pull back to that shoulder line and stop short. And it really ain't that much of a pullback. A couple bucks. Man, sometimes my mistakes pay off good. What I'm doing is considered day trading, scalping, Mo, on YouTube. Scalping it only lasts for 30 minutes. After 30 minutes, it becomes a day trade. So you have a 30-minute time frame for scalping, and then anything after that 30 minutes, it becomes a day trade. I like to get them first ones out of the day, that first hour, that first half hour, first hour of the day, I like to get them scalps out of the way. By that time, we start forming patterns. And then I got to look for the squeeze on the pattern to continue a day trade. But a day trade is longer than 30 minutes. And then a swing is when you take it and swing it overnight. So you have a scalp, which is 30-minute time frame. A day trade lasts throughout the day, anything past that 30 minutes. And then a swing trade is when you take it and run it overnight, or 3 days to 5 days. I hardly ever hold a stock over 5 days because I'm trying to catch a squeeze. And if I get any kind of breakout, like let's say I swung it overnight and that morning I get a big pop, I'm going to get out of that trade. I guarantee it. I'm not going to wait, because what comes up comes right back down. But I'm doing it with a pattern. I want to get out with a squeeze. I know it's getting ready to break out. And I like to buy it at the bottom and sell it at the top and not hesitate. Now they've got overweight price rating on this NVIDIA to 775 by Cantor Fitzgerald. So they want to break that 650. That's a bold statement, 775. I think there we go, 710. I'm disgusted. Anything past the, right now it would be called a day trade if I was in it more than a half hour. And see, when we hit that resistance level, that opening price, that's right out of the gate. So that's a resistance level. And we talk about this all the time. When you come up from the bottom and you create that little symmetrical flag, see, this is a symmetrical flag too, besides it being a head and shoulders. You got to look for that pattern. Damn, can't figure out trend line 5. So you got the snake breakout with a hammer, forms a symmetrical flag right here with tweezer bottoms, and then moves on out. Now I think this thing's going to pull back down to this support line and then run back up and try to retrace, or it's going to hold this here head and shoulder line. There's your left shoulder and your right shoulder, and your right shoulder. Now this thing's getting ready to squeeze to the upside. You've got to watch these candles. That candle is going to be a very important candle right here. Now I've traded these Trump stocks before. When they have a real good run, they like to pull back hard, because these socialists on CNBC, they're not much for Trump anymore. They used to love him. And we've had a real big run on this one here. Huge, bigly. Let's see if this pulls back to that shoulder. We got the VWAP first, second, and third support. The VWAP is going to be the second support. The shoulder line is the first. And then we got two shoulder lines here. This one, shoulder, that means left shoulder, right shoulder, right shoulder, left shoulder, head, right shoulder. Sarah.
Because it's been tough to figure out what the consumer's doing. We're going to talk to 3M, for instance.
It's not, I'll tell you what the consumer's doing, honey. I went to go buy chicken this weekend, and what used to cost me about $12, the price tag was $33. Do you understand? That's what the consumer's doing. So instead of having chicken, I had a hot dog. I can't believe how much frickin' meat is anymore around here. And that's more than a 30% increase. That's like 120, 130% increase on my chicken. It's not hard to figure out at all. I don't think I bought a new shirt. I probably need to go out and buy shirts. I haven't bought one in a year. And I hate to go see what them are going to cost. Usually they cost me about $130 for a shirt. They're probably about $200 now, if it's the same company. Right now I'm wearing a silk shirt. This one was $80. My shoes went up $10, $20 from the last time I bought them, and I buy them every, what, 4 or 5 months. Lily bounced off the 615.46 that I jotted down here. 615.46, Lily. I didn't take the trade because I wasn't watching it, but I should have. Now Microsoft's pulled back to a shoulder line on the 1 minute. How's that SPY trade looking? Are you still in that SPY trade? Oh God, look at that chicken. God, what'd you have to do that to me for? Do you understand? I can't take her very much. Sarah.
Put in the NASAMS short-range air defense. We've given them Stingers, we've given them Javelins, all of things out of inventory. But frankly, they're running out of missiles. Whether it's the GEM-T or whether it's AMRAAM for NASAMS, they need more munitions to counter this threat. And until Congress can act and spend some more of our hard-earned money over there, this conflict is not going to end. And I think that's the one thing we need to, as Americans, think about it.
I don't want to think about it. I want Trump in here so this all will stop. This war would have never happened if Trump was in office. Do you understand me, meathead?
Prevent more atrocities in Ukraine.
Or what happens?
Well, I think as we've seen over the last year, it's going to be a stalemate. This is World War I trench warfare with drones. And again, the drones, pretty effective the way
RTX, this guy, I guess, represents RTX, so he's pumping his...
So this is going to be a long...
He wants Congress to spend more money.
Absent some significant infusion of additional weapon systems into the Ukrainian battle space. I'm not talking about, you know, F-35 fighters or anything strategic like that. I'm just talking about air defense missiles to protect the skies, to protect the people.
Now, let's talk about something that you have that if we could get more of, maybe it would help a lot of countries and also help shipping. Talk to me about the program called Coyote.
So Coyote is it's an interesting weapon system that is in low rate production today. It's a small missile. You can mount it on the back of a pickup truck or an ATV. You fire it against a swarm of drones, and it can take on a drone swarm either kinetically by hitting the drones or through high-powered microwaves.
God. Oh, my friend. None of my liberal friends. We all used to talk about no war, and I'm the only one left that still says it. All the other ones are crickets. Because they voted for that idiot. Netflix looks sexy. Again. You're welcome, Mo. The best way, I think, to become a good scalper is the way I'm showing you. Is to learn to catch knives, snake, break out into a pattern. Then when you realize what kind of pattern it is, and it could be a bullish or a bearish pattern. And I'm gonna show you how to look them up. Google bullish, bearish, chart, PATTERNS. Pull up images, and you can find all these patterns and find you a good template that describes both bullish and bearish, like your top 10 patterns right here. Continuation patterns are a great one to use. Bullish and bearish, bullish and bearish. This is called a Darvas box, rectangular. If it's coming from the upside and goes sideways, it could go out. I play the Darvas box, so I'll show you how to play them. But that's a good way to learn them patterns. I didn't want to go through too much. Just type in bullish and bearish chart patterns in Google and learn them. It'll improve your trading 100%, maybe more. I emphasize it big time. mean, I'd paper if you don't know what a pattern is, I wouldn't trade at all until you. See, like this one right here. It's got a big old fallen wedge. Then it turns into a head and shoulders. There's your neckline. There's your shoulder line. And then once it breaks out, boom. I listened to this one kid pumping AMC. He's what, 19 years old, and he got on there the other day. He says, I'm here. He says, I haven't traded that much that long, but he keeps pumping this same stock every single day in his little video. He says, I'm hearing people are day trading and scalping and make 10 grand a day. Once my daddy shuts down his business, I'm going to start day trading. And I've come across a lot of kids like that, or a lot of people, not even kids, adults too. He doesn't know a thing about trading. It's all on hope. I'll be right back. I'll get back with us in a second.
Our roadmap for the rest of the hour. Shares of WWE and UFC parent TKO surging on news. Dwayne Johnson is joining the board, and the sport coming to Netflix. Find out why he's so bullish on the business next.
Plus,
They make a lot of money. TKO.
Activist investors.
They make a ton of money.
Exclusive, or at least highlights from her exclusive this hour. And 3M shares under some pressure as guidance comes in light. Mike Roman's going to join us, talk about the outlook for the company when Squawk on the Street continues.
It's really been flat for a while. Oh man, yeah. It's already bounced back. So support for TKO, 86.59. 86.77. Let's go with the wick on this one here, being it's been such a long period. And I'll wait for that thing to pull back now that the rock is on the board. Sometimes it just takes a member. I mean, I remember when Oprah got on to Weight Watchers, that stock flew 70, 80 bucks. And she's always had this issue about losing weight and putting it back on, and losing weight and putting it back on. But when she got on the board of Weight Watchers, that's all it took for that thing to bounce. For example, they take me and put me on a Bass Pro Shop. They know how I can catch them largemouth bass and crappie. The whole world would be amazed. God damn, did you hear Washboardjim's on the board of Bass Pro Shop? Man, I'm buying that stock. He's one of the best bass fishermen in Springfield, in Missouri.
50% off.
I'm excited, you know, and I'm always looking to grow. I like to say that I'm a builder of things and I enjoy building. Sometimes they work, sometimes they don't. But with something like this, everything that I do and everything that I do touch, there is usually, not usually, there 100% is a deeper meaning to it. So joining this board, I have been asked to join other boards in the past. Joining this board was unique and different and special in that, again, I'm sitting at a board that my grandfather and my dad helped build, and also helped building a company and growing it globally with a global footprint with a guy who I love and admire.
That was Dwayne "The Rock" Johnson. He joined us last hour with Ari Emanuel, the CEO of TKO, because he's joining the TKO board of directors. The company also announced that its WWE Raw will be leaving linear television. It's going to Netflix next year. Now, in a filing, they said the deal's worth a little over $5 billion over 10 years. A lot of different analysts and investors trying to figure it out. On our air, Ari Emanuel, CEO of TKO, said it was more or less in line with expectations, but that given Netflix's presence, that in part is accounting for a lot of the enthusiasm with which this deal is being met because of its global reach and the like. And that certainly can't be argued with at this point. Obviously, the importance as well of what was a property that was on linear, now going to streaming. Netflix has moved more deeper into live programming, also worth noting, of course, and the presence here in international markets, Canada, UK, Latin America, optionality as well around some other markets over the next few years, such as India and Australia, where they're unwinding the WWE network internationally. So that gets you closer to that $5 billion over 10 years is what some analysts are saying. And again, and essentially de-risks much of the business because there had been a fear perhaps the numbers would come in below and or a deal would not be with as strong a distributor as Netflix. So you can see that. Of course, we're waiting on Netflix earnings after the bell as well. Subs there are pretty significant in terms of expectations, Carl.
Yeah, Citi today puts the bull case 135 on TKO, and that was written before the Netflix news came out today. So we'll watch some of the upside scenarios for that stock. In the meantime, after the break, an exclusive you don't want to miss. Co-founder, chairman, and CEO of Salesforce, Mark Benioff, sounding off on activists, AI, and a whole lot more in a moment.
I just don't want to get stuck with paying extra. I mean, I paid my sales tax on this thing and I don't have a credit on it anymore. I already used it. Okay. Okay. I'm just freaking out on this car. Okay. Okay. All right. Okay. Yeah. True. Yeah. I can't sleep. I gotta get back and forth to work. Okay. I want to work at work. That's all I need to know. So now we completed the first hour of the day, so I'm more relaxed. And I got to wait for pullbacks or extensional breakouts. For example, we traded DWAC yesterday. So we're looking at DWAC. Now we have some resistance here at the VWAP. We also had the snake breakout, pull back into an inverse head and shoulders. And we broke the 1, 2, 3 on top of that channel.
Last year at this time, Salesforce was under heavy pressure by a number of activist investors. Though over the course of the year, many backed down as the company substantially improved profitability and the stock shot up. I sat down with Salesforce CEO Mark Benioff last week in Davos.
It's also an ascending triangle.
About this. He didn't hold back in sharing his
So
thoughts
let's
about
get-
that activist
check this out.
environment, AI, and much more. Have a listen.
Honey, I don't want to hear you.
I get a lot.
You get under my skin. DWAC. Then these things are priced $50. I don't want to go too far out of the money with this. Whoa. How'd I get 2 of these on here? Okay, one thing I notice here on this trade that I don't really want to take it is the spread between the bid and the ask. I need that to tighten up a little bit, and it's starting to do that right now. There we go, see, 570, 575. I need to hold that tightness, and that'll give you the extension that you need for this thing to break out. And your resistance is going to be right here. And there you go. Missed it. I got my alert set for TKO at 87.69. Tesla pulled back to the 200 on the 1 minute. Yeah, let's see what this other channel's doing. It's live, good. I got to get away from her.
The public can have confidence that a company that stands out as a leader in ESG is committed to its own ESG practices.
All right. Ben, thanks for the explanation. We're watching the shares. You're fighting right now against stock that's trying to break out to 52-week highs. So good luck, and we'll keep tabs. As always, appreciate your time.
Well, thank you very much for having me, and look forward to coming back in the future.
Thanks. Thanks for bringing it to us. Ben Axton, Founder and Chief Investment Officer at Spruce Point Capital Management, expecting deep downside to MSCI. 65% downside risk max as of the report earlier this month. All right, when we come back, Chartmaster's got some charts. Exxon, Coinbase, and Enphase. A couple of interesting ones here. Be right back.
Pumping Exxon. I haven't even looked in the room yet. Sorry about that.
Knock, knock. #1 broker here for the #1 hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Every morning, every...
Amazon Zoom Video. Stock insiders are selling. PayPal dipped yesterday. Pfizer's up from the bottom. Johnson & Johnson is on their list to buy. Okay, spies pulled back to 3 black crows. Are you still in that spy call? I couldn't get that in there. I sold that in the video. Anybody stuck in the stock? It's hard to trade while you're at work, that's for sure, when you're trading something like this. AMC's knifing, as expected. Goldman Sachs pulled back. Didn't hold my support channel, Bito, B-I-T-O, the Kathy Woods one. She offloads 12 million pro shares of Bitcoin. ETF acquires 21 million of its own spot ETF amid volatility. Kathy Wood buys $44 million worth of this one right here, Bito, on a week while selling Bito. What? That's how to create a watch list. I don't want that one. Hmm. Yeah, that was a nice little double bottom on AMD that I mentioned earlier. Baba had a new high, broke my resistance of 73.36. Well, here's the guy with some charts.
Downward here, falling off notably. We're once again below that 50 midline here. Some areas to watch, I would say,
Coin.
on the downside, these old lows near 118.40. That could be one area to watch. Then around 100 is where we topped out a couple times. We broke above it, retested that.
Let's see what he's talking about here.
Also quite close to our 250.
I think I had that 118 also.
98 to 100 could be a support area to watch. Resistance at the moving averages.
It's amazing the way the volume profile is kind of spooky if you're a coin bull, the way it just really
Heck yeah, it is.
skews to the downside, which suggests, you know, that spend a lot more time feeling comfortable below $100 than it did above $100.
I know I had 118 on here.
$100 level test is definitely coming here, if not already, for Coinbase in the crypto world. Thanks, Ray, for the perspective on the charts. Jenny Horn for the analyst notes. When we come back, we've got a developing story in the streaming world. We'll go back to the WWE deal with Netflix, tell you some more about the details in that Raw partnership coming up next, ahead of our market meetup. Right now, stocks have faded a good bit since the open. Russell's now red, down about a quarter of a percent, bringing it up almost 1%. NASDAQ now is your winner on the day, thanks to Apple, thanks to Meta, Alphabet, and Netflix, which are all solid, almost a percent. Exception Apple at about a quarter of a percent, but it's definitely helping the market keep it together here despite the fade from the early strength.
Market seems to be dead, he says.
15 minutes of morning trade live.
I remember when I first started flying, and we would turbulence. I would watch the flight.
DWAC came back. I think we're going to go back to the shoulder line on DWAC. Just be careful with it. I think it's losing a little bit of mustard in it. Now, Sue mentioned PHUN earlier. That could be a penny pump. PHUN. A lot of rooms will be watching it. And we did hit resistance today. No, they had an offering. That's not good. That's probably why the penny pumpers got on this trade. On the 19th. Yeah, that just sucks. Save is about ready to get. This is something that Mike has talked about. It's the deviation chart. If you're looking for new highs, that's a good chart to use. Standard deviation. I've got got one set at 2 and one set at 1. That gives me all 4 of them. That's a good chart to use when you're. It's called standard deviation. Now what happened here? Oh, wow, I did learn something. I love learning. Okay, the SPY now is pulled back to support level here. And they're going to keep the rock. Now they got the rock on Schwab.
The number of members on its board to 13 members from 11. And as you can see, the share price action blazing higher. It's still down a little bit from that 52-week high. Comcast, though, shares are higher. That's the owner of NBC Universal. Endeavor, which is the majority owner of TKO, shares are rising there as well.
All right. Just saw a video of The Rock at the New York Stock Exchange.
Yep.
Part of the big deal. All right. TKO ripping. Loving it. 17.5 million viewers through USA, so that's a pretty big lift for Netflix, and it seemed like
It is a big deal for Netflix.
it was a pretty good deal.
That's why I think Netflix might have a good run.
I suppose Netflix shares also a little bit higher still today, despite a rough market.
That's real good news. I mean, besides how much I used to love him.
All right, let's wrestle with some market analysis. How about that? Kevin Hicks and Dan Grant joining me. Mr. H.
And it's pulled back too, so check out Netflix here.
We faded that Russell move, Kevin.
Just had such a huge run, it just kind of
together for us with a few of the key names higher.
I think this market is waiting, and it's probably getting a little impatient, waiting for earnings
next week,
data at the end of the week. You know, I think Netflix is going to be a big earnings announcement today.
Yeah,
I think that's going to be impactful because I think they have a lot to talk about, including the deal that you just mentioned. But there's an evolution going on in Netflix and streaming in general, where the next chapter is going to be live sports. You got to think.
Yep,
it's
I'm going for it.
And so Amazon already dipped their toes in. YouTube has got the NFL ticket. They're dipping their toes in.
This time I'll get it right.
Here it goes.
Peacock had a big, successful football game, right?
A lot of people scrambling to download Peacock right as the game came on the air. So I think that's it's the next chapter.
Yeah.
God, they're so freaking high.
This is Netflix going into, I'm not going to call it sport so much, but live entertainment.
Hey, watch it. Rob Wietrowski's going to pin you or power
Oh, man.
Pile drive me?
Yeah, something like that. All right, so Netflix, I think, is fun because
That sucks.
it has been this incredible leadership story.
Look at the price on these calls.
Real commitment to.
And they expire in 3 days.
High-growth business, now profitable.
Unbelievable.
Stable. You know, it's still well off of its all-time highs, and it is in the ranking of the mega caps fairly low by that standard, given that it's so far off the highs. Kind of like a Tesla. You know, Alphabet's pretty close. Microsoft, Nvidia, Apple have all made the record.
If I was to do it, it'd be the 510.
Offers a chance to lift more of that mega cap Magnificent Seven.
Our second look at ad-supported revenue tier is going to be a fun one. And you know it's a good story when the CEO comes out and says, well, we should have done this earlier. Well, this is really good.
Yeah, well, that's what George Tillis was telling us for years. Why didn't they do it? Why didn't they do it? All right, let's talk the macro here. Bonds selling off. Yesterday they rallied. Kind of seems like we're going back and forth here, Dan, with the 10-year about at that 4.1, seeming a little bit more comfortable here, than it did in the threes.
Yeah, so the 30-year bond is the story as well, right? So the 30-year bond's all the way up to where the 2-year note has come down to. 2-year note being right at 440 and the 30-year bond sitting at 436. What the kind of the market's kind of pricing in, or kind of not really sure how to take this, is are we going to get 125 basis points worth of cuts between now and Jan?
Yeah.
Right? But 100 basis points between 121 basis points by December Fed funds.
Right.
The Magnificent Seven, or the big tech, is pricing in the fact that the Fed's going to cut rates. Right? I don't know that the market's going to, I don't know that they're going to get it.
That's what we're going to test here, is how much is earnings, how much is rates. Because I would argue that some of these, I mean, there's...
They'll get it, but they'll only get one or two. It's an election year. They're not going to get the 6 they priced in. Earnings sucked, to my opinion, but like I said, it doesn't matter in this market. It doesn't matter. Fundamentals don't matter much, as long as they got cash. I haven't seen a market like this ever, especially when you have earnings that are so bad. I think we're introducing a big bubble on these tech stocks, but they came out and pumped it again. I'm very tempted to buy. I mean, I got to spend $1,060 if I'd have bought that stupid 510 strike on Netflix. I'd be up $40 right now. I'd have to get 200 out of it. Just imagine paying $400, buying 100 shares of at 486. It'd be $48,000 instead of paying $1,000. Baidu. I didn't think about it. God. DWAC going down. I'm going to go and make me lunch. Okay, DWAC's back to the shoulder line. Jimmy called this out. I don't know. I think it's kind of losing a little bit of mustard here. The only way to tell is to watch the tape and watch the size of these blocks. Yeah, Jimmy will wait. Don't rush yourself. SPY's forming a wedge. So the 484s. SPY 484 out of the wedge. We could be going to the upside here. We got to wait for it to pull back. Here's your head and shoulders out of the snake. So it pulls back to this here trend line. I'm going to jump in the trade. And get 10 of them. Okay, get ready. We're at 106. The VWAP on the SPY. We're way below that. And that's where you want to take it to. 483.73 VWAP. Yes, sir. Whoop. That's not what I wanted to post. Seems like the market's a little bit bearish right now. Got to be extra careful. I'm going to look for the 200 SMA. In fact, this one resistance 2. Then we'll go get my lunch started. 483.87. It's a falling wedge with an inverse head and shoulders. I can see it today ain't going to be a big dollar day like usual. We're consolidating is what we're doing. Wedge, falling wedge. Now the tape's looking good there. Well, it was. I'll be right back. Now, if you're in this trade, we could come back down and hit the 21 if this 9 doesn't hold. Right now, as long as we stay above the 9, we're still bullish. That's going to be my leading indicator as of now. On the 1 minute. Now on the 5, it's still going to be the 9, but it's not as, yeah, it's still going to be the 9. Resistance, support, support. And if you get up, I don't think it's going to break out big time. So if you're happy with any kind of little $100 or whatever, I got 10 contracts at 108. Like I said, I don't think today's going to be a big grand finale. Let me get my coffee. Oh yeah. So that's the 200 SMA. I missed it, damn it. So YouTube, falling wedge, inverse head and shoulders, and on the 5 minute, I usually use the 1 minute, but I see the 200 SMA here, so I'm going to go back to the 1 minute. And the 200's up here. So I think we can get more out of it. Just hard to find something in here. Pivot point. And this flag. You got a symmetrical flag right there. Right there's a symmetrical flag. And every flagger's a pivot point. 483.94. Yeah, that's good. I'll take that. Damn it, now it's back down. Back to the 21. That was planned. Should have got out of that. Right back to the shoulder. Add a little bit more here and hope for the best. Always clean this gym. Hello? Yeah, I think it'll be a good trade today here. They're bringing it down. Richmond Manufacturing Index. Come on, beast. Right now I'm down a couple hundred. Shopify.
Absolutely see a huge risk on move in this name straight up to that $99. Now, the pre-adjusted price, the all-time highs in Shopify at 176s. I don't have any illusions that we're going to go working towards that level, but it certainly is a very strong possibility that we see Shop break through that 83, 84 and just rip it straight to 99. And then we'll see if it really starts to find acceptance into that, triple digit $100 price range. And if it does, the skies start to open up. That's really where we could see these huge profit pockets all the way up to around 150 and then that 176 all-time high price. So this is definitely at that kind of crossroads in the near term, almost a make or break level. If they can't get through 83, I expect a pretty deep pullback, more than 10%. This is something you're gonna have to be really patient to buy the dip on. Perhaps even, down by that like mid 60 range, but if it does happen to break, this is one that could really stack and run away very, very quickly, like these momentum stocks here.
Damn guy.
Yeah, like earlier this year, it had 8 consecutive winning days. I mean, it's up 1 month, 1 year. I mean, depending on whatever you look at. For example, it's up almost 100% in 1 year. But I will say some of the targets are not as high as what you can look at. Oppenheimer raised Shopify to $90 from $80 with an outperform rating. I saw that one. Piper Sandler has an underweight of 56. Deutsche Bank 95. So it looks like there's a variety here. Barclays has in the 70s. So it looks like there is a variety. Ben, your thoughts on the Shopify charts, please.
Nicole, I hear Charles using words like rip, acceptance, stacking up, running to describe price activity, and that's exactly what I see playing out here. This is a stock that's been trending higher, much like Marvell, and easily identifiable in terms of what I look for, the 2 phases of price development, which helps us determine which way value is moving, and in this instance, it has been to the upside. Let's begin first and foremost, 5-minute candle chart. Just a look at the price activity off the lows from last week really speaks to some of the strength we've seen. 76 up to 82, just shy of 83, and acceptance has, Charles just used the word, currently around this $81 level. So no rejection of the run-up that we saw, sideways consolidation, basically horizontal development, random albeit at this point, but supportive of the trend up because we're seeing value move higher from 77.50 now to 81. So let's take a step back away from the 5-minute candle chart, and similar situation playing out here when you look at the hourly candle chart. We see price stacking up right now around the 60-minute consolidation area. Again, 80 in this instance we're looking at. As long as we hold above 75, I think that we're currently in a bull trend. You can see 4 areas of consolidation after earnings back in the beginning of November, sent the stock from 47. Look at this, high conviction vertical phase, easily identifiable transition in the horizontal, wash, rinse, repeat. You've got a trend to the upside here, Nicole, in shares of SHOP. One more step away from this hourly candle chart shows us a similar pattern playing out. All we're doing is adding time on to this, so going further back but seeing a similar depiction, right? We've got easily identifiable areas of value moving to the upside. We're talking bottom left to top right, the kind of chart that gets me all fired up when I look at this price activity because it fits right into what we try and establish here, trend, areas that we can base trade on and reference current and prior areas on. Taking a last look here at SHOP relative to the 50, the 200-day moving average. RSI not really providing a lean one way or the other, but across multiple time frames, bottom left to top right, bull trend playing out here. Yeah, Nicole.
All right, thank you for that. Final thoughts on Shopify, and then get to Snowflake today, Charles, please.
Snow.
Yeah, I talked about 2024 being a big year for AI stocks. Let's not forget that Shop has integrated AI into their system, so it's going to help. The thought is that it's going to help with their margins and obviously, put them in or back into a growth cycle. It's pretty interesting to hear the analysts, the wide pricing ranges, but ultimately this is a retail darling, and if the momentum kicks in, well, that's where retailers come in, and that's where we can see that explosion. So they may need that catalyst to get above 83, but still holding that uptrend. Really love the opportunity and potential in Shopify.
All right, and then next up, as we talk about Snowflake, this was one that really took off after its IPO. It had the backing of Buffett at that time. Then it faltered. It went down to 128, but has recently hit a high once again. And I even see some 225 targets, 198. I'm seeing a few to 230 from Truist, for example. So some upside potential here.
Yeah, I guess I could kind of be considered this perma-bull, but generally I'm a momentum type trader, and this is a momentum stock that certainly kind of fits the profile of what I love to trade. Now, what's really prominent, especially today's move, was that there was a grouping in the last basically month and a half, right around this $200 to $203 price range or 202 price range. And it's been a core resistance level. Today they exploded through that level, hit almost at 206s. This is something that we need to watch, because one of the reasons why we've rallied here in recent months is not just because of the semiconductors. That's been a big driving force, quite honestly, since COVID. But prior to COVID, what was a big driver of the bull market, especially in tech, was cloud and cybersecurity. And we're starting to see these cloud and cybersecurity names wake up. And of course, again, the idea of AI is only going to benefit these companies in terms of growth going forward. So we've seen that, super cycle kind of come into the semis. We can see that rotation kind of come back into cloud. We've seen CrowdStrike, Zscaler, and others absolutely exploding here in recent days. I feel that cloud names are next. Names like MongoDB, DDog, Datadog, and of course Snowflake. Snowflake is at this kind of crossroads as well now that they've broken through this level. I want to see them find acceptance above 209, and if they do, there's a tremendous amount of upside in the near term to 250. Now, the reason why I call these huge profit pockets is because there's no technical resistance ranges for technical based traders to step in, for technical based buyers to take profits. And again, when a stock like Snow gains momentum, we've seen that they expand the ranges from $5-6 a day to 8 and 12. So they garner some real big momentum, and we'll take them long to get to 250 if they truly have that demand, helping that propellant. So we'll have to wait and see. Showcasing a technical breakout here at the 52-week highs. If there's any momentum, we start stacking higher highs. This thing could get going very, very quickly.
Right, you need the volume, the momentum, and to see if you can get that trajectory higher. Ben, your thoughts on the technicals here?
Well, Nicole, I feel like when you're looking for a breakout, as Charles is in this instance, you're looking for strength into the test of that upper extreme, and in this case, that's exactly what we're seeing. Another instance where we're seeing trend up across multiple time frames. When we get into the weekly chart here in a second, the bigger picture, you're going to see the significance with the 209, 210 area that Charles was just referencing. Let's just begin first and foremost, as we did with our other two examples today, a more granular intraday time frame, 15-minute candle chart going back to the lows from last week, 182. A couple well-defined areas of consolidation. Your eyes should be drawn to these horizontal areas where the market's just kind of
193,
not a lot of conviction, versus this high
198
separation phase, the vertical phase, and then the transition from one to the other. And let's just establish on this again, 15-minute candle chart, two areas, 200 and 187. So we're currently bouncing around 200 as long as we hold above 187. Still,
I don't know about the 187, but how about 192?
Chart here, just looking at the most recent price activity, but trying to establish
that's the bottom of the linear channel.
Momentum to the upside. So let's take a step back on this candle chart here. We've got 4-hour candles going all the way back to the lows we saw back in October, and you can see what I'm talking about in terms of momentum. In fact, bottom left to top right, easily identifiable here. Let's just show some of the areas of consolidation. Well, areas that my eye was drawn to. Oops, hold on one second. This is the one I was looking for. Currently bouncing around 192. As long as we hold above 165, you can see a couple tests of this lower extreme, which have held here. Key area, again, we'll call it 181.85. You also have a couple upper extremes, which it looks like we're trying to break out of here right now. So again, well-defined consolidation, bull trend with momentum, with energy to the upside, and the bulls are going to be looking for some follow-through. Follow-through comes in the form of a new area value forming at a higher level, right above this 192. Let's take one more step back, because this is where it gets a little cloudy if you're talking about the bullish narrative here, mainly because you can see the significance associated with these areas of consolidation, this wide range area. We're going all the way back to spring of 2022, Nicole, and you can see that the stock here has been and continues to be after a big move to the downside, which you mentioned as you introed this discussion. Take a look here. You can see that Well, we've been balancing again around this 160 area. This is a weekly candle chart going all the way back here to the fall of 2021. But look at the conviction on the left side of the screen, sideways consolidation. So again, testing this upper extreme, and this is exactly what Charles was talking about. 209, 210, get above this, and as you mentioned, there's some pockets for some upside potential. Lastly, one more chart. Above the 50, above the 200-day moving average, you can see, look at this building momentum, exactly what I was talking about. Last thing the bulls want to see is that new area value form at a higher level and RSI participate here. So, but there's energy, the upside here in shares of SNOW, Nicole.
Okay, and to your point, right? I mean, this was a $400 stock at one point. There were a lot of high hopes for this name, but now we'll see if we have the potential for these pockets of momentum and moves to the upside. Thank you both.
I don't know why I can't see that chart on there.
Charles Moon and Ben Lichtenstein. Great to see you both. Thanks.
There it is.
Coming up next is Spotlight on 3M. So the stock has dropped after the company's earnings outlook fell well short of those expectations. More on 3M. We'll be right back.
God. It is at a support on the 4 hour.
Binge watch the market with the Schwab Network. Tune in 20.
Well, heck. I'm not feeling that bullish today. We broke my major support. And somebody just sold 17,000 shares of AMC. Okay. Not yet. Not in puts yet. I'm still holding this stupid call here. Might put a little bit more than I want to put in it. But I'm not feeling very bullish. Do 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 do. Doo-doo. Come on and rebound. Now I'm trading on hope. Oh, I got some mustard on my ketchup on my shirt.
That consumer discretionary type spending, as well as to industrial spending themselves, capital spending. Now, on that note, one thing that we're cautious on is that channel destocking, right? So higher interest rates have begun impacting a lot of industrial businesses due to higher carrying costs. Higher interest rates mean higher costs of inventory, and as long as that's flowing through to customers, they're going to be a little more cautious on order rates. So we're seeing that in declining demand. We saw, even if you look at manufacturing PMIs, the same story, even beyond just 3M, is that order rates are coming down on this trend towards channel destocking because of higher rates. So I think looking to later this year, interest rates could be that wild card. If we do see more aggressive cuts, this could be a positive catalyst.
Let me ask you, I mean, you have a hold rating on this name. There's no company that's like 3M because of the different segments that we just discussed. But do you have some buy ratings or strong buy ratings on the mind that may be similar to this in any way, shape, or form?
Sure. So
Well, that was
there are a few manufacturers we're more positive on, given their deeper exposure to secular trends, less cyclical headwinds that they have to digest and deal with. So one area we're seeing a lot of consistent demand is for aerospace equipment and components. So currently we have a buy recommendation of Parker Hannifin because of that large exposure to the aerospace market. And we're going to expect to continue to see very strong demand for these type of products given the ramp up in aviation production on a return of flight activity globally. So this is one area within industrial manufacturers that we are quite positive on, but it really has to do with how much they're exposed to it. If they have a limited exposure like 3M, then it's going to be kind of clouded by more cyclical headwinds.
I haven't traded 3M that much.
So I have Parker Hannifin. That's a name that you have as a buy overall when you think about the aerospace group. I mean, do you have themes for 2024? Do you think we're going to be in this higher for longer? I mean, how are your strategists working it out for 2024? Big picture thought?
Sure. So currently within industrial sector, we're underweighting it actually. We think that a lot of sales and earnings expansion this year has been brought on by pricing adjustments. We even saw that help to buoy 3M to some degree this year. So in 2024, we think that results are going to be, the contributions from pricing are going to be a bit more limited. So they're going to be a little more exposed to, or more dependent rather, on volumes expansion versus just having pricing kind of cover up or balance against that. Additionally, the interest rates, we're expecting those cuts to come later in the year. So the pain points in manufacturing sector could continue. We're already at 14 consecutive months of contraction in the manufacturing PMIs. That's quite significant. I mean, that's longer than the stretch of time consecutively for the Great Recession. I mean, obviously not as deep of a contraction, but we've seen a very prolonged slump, and we think that can continue at least into the first quarter of this year.
Bring out.
Jonathan Secreta, thank you so much of CFRA. Really appreciate this look at 3M and some of the other names. Thank you.
Yeah, 3M.
Coming up next, Disruptors. George Sillis is standing by. He's going to trade Qualcomm for us. Got a price target hike at Wells Fargo. It's been a winner. Year to date, it's up 5%. 1 year, 4%. Let's find out more about Qualcomm right after this break.
God. They want me to invest in QCOM? Are you crazy?
Binge watch the market with the Schwab Network. Tune in 24.
I hate that. And they run up so freaking much and they call them out. These big engulfing candles here, I just can't do it. So I'll set my alert off the 9, off the bottom of the body of that candle right there. Oh, I can burn your ears there. That didn't work. Go, baby. Break it. So if we break this resistance, I'm going to take it there and get out of this trade. $108, $102, and 86. go. All right, I'm almost even now. So right now I'm even on this a little bit. Right now I'm up 2 cents a share contract, and the volume's picking up. We are hitting a resistance, so I got to make a business decision here. Do I think I'm going to go up and hit the VWAP, or am I going to hit this shoulder line of this Head and Shoulders? That's the question. I'm up a penny. Thought it was 2 cents. Smart thing to do would be to get out. If you're even. There, almost 3,000 in this thing. Yeah. Go get my coffee. We're squeezing on DWAC. We're going to know something here in a couple minutes on DWAC. Getting real tight here. Get ready to watch what? See, that was a smart thing to do. No room for error today. I'm gonna go make me a mocha. Mocha will cheer me up. Anybody stuck in a trade? YouTubers, have you stuck in any kind of trade right now that you're kind of concerned about? Tesla's not holding its gains. We got earnings tomorrow. I think you're just waiting. Okie dokie.
To what extent, if consumers trade down, will branded manufacturers look to counter those efforts by funneling additional resources toward promotional spending to try to chase short-term sales and market share gains? In the case of Procter and several other competitively advantaged operators,
now if I hit the VWAP,
that's a concern.
I'm going to scale out.
And so we would look for them.
This sucks being in this trade so long.
Have an eye towards the long term, and think that that could be, you know, another positive as it pertains to the overall performance of the sector, which has come under
Now's
pressure,
my second chance to get out of this trade.
Quarters.
So concerns about volumes and whether or not they're going to be ready to spend for the brands that they love. And we saw people trading down. I mean, when they were worried, people in a higher bracket were then shopping at Walmart, and they had never really been to Walmart. So sometimes this is the final point, Mel. I mean, your thoughts, because they did have and invested in their
Oh,
brand.
shit.
But, you know, just this weekend I had a conversation. People have been shopping at this supermarket, Lidl.
Let's go to Walmart, fill up our shopping carts, pinball, bird seeds, and all the things you need. Let's go to Walmart now.
Mel, final thoughts here.
Sure, that's interesting that with the German supermarkets, they've been
How
very
dare
active
you
in growing share in
be
Europe
seen
for
shopping
many
at
years.
Walmart?
To the U.S., there's a lot of inflation is slowing, but it's not like prices are necessarily going down. So you're going to definitely see people being more open-minded to new brands, exploring things.
You'll never catch me shopping at Walmart.
A headwind for these companies to be aware of going forward.
Yeah. It's interesting because I have friends going there now because there's not a lot of brands that you know. It's different brands. And so the behavior.
I wouldn't be admitting
seems
that,
to be
honey.
a variety.
Not on
In some
Schwab.
areas, no one's going. And in other areas, they're running there. So thank you both so much. Good to see you. Erin Lash of Morningstar, Mel Casey, FBB Capital.
She's actually saying,
Good to see you both. Really appreciate it.
I've heard that
Thanks,
before. I've got friends going to shop there. She's shopping at Walmart. This chick right here. She just don't want to admit it. Oh, God, I love you. We're at 104. Oh, please. Now, I am at my resistance level. I'm at the shoulder line that Jimmy called. This is a head and shoulders. Randy? Mike, what do you think? Should I hold on? Should I hold on to the SPY?
Trust me, I'm like a smart person.
I've got a lot of shares, contracts. If I get another 10 cents, if I even hit the VWAP, I mean, we're at a, okay, 1, 2, 3. Jimmy just saw it. 1, 2, 3, count to 4 and give me more. Wubbits. Uh-oh. Get ready to get out. I got a 1 bits, 2 bits, and a freebie. And we are close enough to call it to the VWAP. Now, once I sell it, it'll pop and break the VWAP. It always does. But I ain't going to do a fake sell here. I'm going to do the real thing. Make a new plan, Stan. Come on, give it to me. Give it to me. Oh, look at the buys come in. Is anybody in the SPY in the room? And you're even? My best advice is to get out of this sucker. Jimmy's out. Now it's going to pop. Now I can sleep. That's the hardest trade I've done this year, I think. I hate getting stuck, and I hate selling at a loss. Anybody in this trade? Give you 434. What the heck? Brandy? There it goes. It's going to pop now. I can sleep. EWW? Is that a stop? Piercy, are you in EWW on YouTube? Is there an EWW? I thought that was TKO. You're at 64. White House said the nuclear attack by North Korea against the United States. What? Oh, God. It's a Mexican ETF. Are you from Mexico? We got a bull flag. We got a bull flag here on the 4 hour or on the 1 hour. So let's do this first. I'm going to trade the cartel. Cartel ETF. The first headline I read here, it says White House said any nuclear attack by North Korea against the United States or its allies is unacceptable.
It's all fake news. It's phony stuff.
It better be.
It didn't happen.
I hope not. I'd rather hang out with Rocket Man than then get blown up by Rocket Man.
Little Rocket Man.
So we've got us a Head and Shoulders. I think for the one thing, I probably wouldn't have traded it just because it's Mexico. U.S. Treasury smelling yellow crosses border payments. Cooperation with Mexico, not about China. Treasury says Mexican Finance Ministry signed an agreement to affirm importance of investment screening and protecting national security. Smell and Yellen, U.S.-Mexico financial team discussed possibility of more deeply integrated cross-border payment system. So that's no big deal there. It's got good volume. It is starting... Oh, we're seeing some negative divergence. So I guess I've charted this once before. No, I haven't. That's what I just did. So let's go to the daily. We broke support. We got a shoulder line right here, so we're at a shoulder line. Let's put the shoulder line. $64.35. $64.35. So it'll run back up to 64.35. And that's where your resistance will be. If you look at the daily, this is a head and shoulders, left shoulder, head and right. And when you break that head and shoulders like we did, it'll pull back to that shoulder line. So we're just a little bit oversold right now. So we're going to pull up to 20-minute, 1 hour. And we got another inverse head and shoulders right here. So, yeah, I think we're going to hold this, maybe. And we got to take it back to 65. And on the daily, you got to break, it's 64.35 and then 65. That's my story, and I'm going to stick to it. Support to hold, it has to be 62.89. That's going to be your low support. This is a channel. This is a channel. So you want to keep it in this channel and no lower than that first Darvis box. So did you get my numbers? 64.35 has to break and take it to 65. How's that grab you? All right, 63.35 has to break. 64.35. I know it's not much, but I'd be careful with the Mexican ETFs, especially if Smell and Yellen's making deals with them. This is a chart that I'm testing out right now. This is called the 21 EMA, and I'm using it. EMA, I'm using it because on a suggestion of somebody that was on Schwab yesterday. So I want to use it as a pivot point area. Let's see how it works. I've been using the 21 SMA. I'm going to try the EMA. It's a fast moving average compared to the SMA. A nuclear attack. Why would they come out and say something stupid like that? Why do they always have to fight with people? Democrats. They're always angry. Hello, this is Retail Traders. May I help you? Yeah, Jack. I just got through talking with Rocket Man. We told him. We told him that if you plan on threatening us with any more of them nukes, we're gonna blow your top off. So don't worry, Jim. Everything's going to be safe. Don't worry about it. I'll take care of everything. Oh. Honey, do you have another Depends? I'm all out of Depends, Jack. So Jimmy got out of the SPY when we dipped. He wasn't paying much attention to it. Why did you get out of the SPY when you did, Jim? Well, we tested it once, and when we come up to retest it again, we had what you call a shooting star. We had a gravestone. We had a bear flag right there, little hammer with the upper shadow there, and then we had a shooting star. RVSN. Woo! RVSN. Oh. Open this week. Futures poised to open its higher in January. System come from. I don't see anything here. I'm gonna wait. Damn it. Could be a 50% pullback on that one. Okay, I'm gonna go over my watch list. I might go over a couple of them if I can find it. What was that? Oh, Trump ad.
We're on that side of it. Kev, anything else sticking out to you in the markets at this point? Because bonds are falling out of bed. We got the 10-year 4.15% at this point. I mentioned the dollar over 103.70.
This $278 billion China stimulus package, another stimulus package coming for China, and China sent, I guess, a huge contingent to Davos to try to get foreign money to come back to China, and the rest of the world looks at China and says uninvestable in most cases.
Wow.
And so, careful what you wish for. They put a lot of clamps down on a lot of business, and they are wishing now they didn't do that, because all over the world trying to get investment to come back there.
Yeah.
And now they're pumping up their own stock market, basically.
Yeah, they're trying to.
Uninvest.
So he's right. The two years went by where they just kept cracking down on Baba, and they cracked down on Ant, and they cracked down on they're just cracking down like commies do. Communism doesn't like capitalism. And there for a period of time, they had one of the best GDP records of all, because they were kind of, and they went overboard with real estate. They built too much, too fast, too much real estate. There's a lot of vacant apartments in China right now, and a lot of them buildings are falling down, falling apart. Siding with Russia was a big mistake. Threatening Taiwan was a big mistake. Trying to take over Hong Kong, which was given to them more or less, was a big mistake. Hong Kong is about the only free enterprise system over there right now. So they're doing just the opposite, just like kind of what Biden's doing to America.
China.
Baba's real cheap. It will rebound if you want to wait and not worry about it. I'm not going to invest in it yet. They did have a big bounce today, and it'll probably pull back down to 71.13. Then I might think about it. I should have thought about it down here at the tweezer bottom. I want to go to China. I know this guy and girl that went over there, and they built them a little catamaran. I watch on YouTube. They're in China. This is not the first stimulus package they did, and they stopped short selling too over there. So best thing for, I think, them to do right now is to defriend Russia. And then I think their stock market will fly. I love the Asian people, don't take me wrong. My favorite woman is Dun Dun. I watch her almost every day.
$300,000 is even better.
like watching her dance. I used to be a dancer. My body's all tore up because of it.
Just could be a massive potential there if that growth continues. If Netflix is switching over to growth again and accelerating.
Yeah.
I think this could be, now, the bar's high for disappointment, but man, they could also, it just worries me. I want to be careful about the strikes you choose, I guess I'm saying.
Right, and if
I
you
like
look
the way
at
this guy
you're
trades.
like, oh, this stock's rallied 65% last year. It's had a good run for the last couple of years. This stock was $701
Yes.
At the height of the pandemic, when a lot of things were getting outsized as far as valuation goes. But you did mention the ad tier subscription. Last month they said it reached 23 million already. That was up from 15 million in November.
Yeah,
so you're seeing the growth there. You mentioned the password sharing lockdown that they're doing. That was a slower rollout. We'll have to wait
Yeah, they
and
call
see.
it paid sharing now is what they're doing.
Right, because they give you the opportunity to get, hey, family members can share, but you pay a less subscription fee. Now,
another good idea.
$2.25 at around $2.25.
We got a triple bottom.
8.7 billion. That's that double-digit
We had one.
year-over-year revenue gain that they're expecting. That's supposed to reaccelerate. How do you want to look at this from an earnings perspective? Because historically, this stock has moved on earnings. I don't know if it's
Last
going
quarter
to this
it
time.
did.
It's supposed to move plus or minus $38. That's a 1 standard deviation move that the option market's pricing in.
Last quarter it moved $50
Yeah.
on the earnings. So now, I think this ad-supported tier is something special.
Okay.
I could be wrong though.
Yeah.
Always put in the case I could be wrong. So what I did, I bought an iron condor. Remember, I still have mental and emotional scars from NVIDIA when I thought I had the right position on and it blew right through me and went way higher. So I did a long iron condor, Tom, $20 on the upside. The 5, I did all next week to give myself a little bit of duration.
Not a pure
For-
earnings play, yeah.
Right. I did the 510, 530 call vertical, which is right in line with the expected move. And that's a $20 call vertical, right? Now, just in case I'm wrong and dead wrong on this, I did the $10 474.60 call vertical. Now this
Or
package
put vertical.
Put vertical, sorry, put vertical. So this package is about $8.78, right around $8.70, Tom. So here's the thing: if I'm right on the upside, it's a good size winner. But if I'm wrong and it moves down big on the downside, I don't lose money. I basically make a little over $1 on this. So that's my thinking here.
That's good,
I
an iron
skew to the
condor right
upside
there.
with a little bit of protection, a little defense. If I
But you don't want to go out that.
All right, yeah. So this is broken wing iron condor that Kevin's
Oh,
buying
broken
instead
wing.
of selling. So you need a move on this type of strategy. So let's break it down. Going out to the February 2nd weekly cycle that expires in 10 days here. Buying the 510 call, selling the 530 call. There's that bullish $20 wide call vertical. And then on the put side, buying the 470 put, selling the 460 put. Paying roughly about an $875 debit. That's what we've got here. That's going to be a risk, $875 per spread on this one. Now, profitability, as Kevin mentioned, if you pay $875, you make about $125 on the downside, and that's below that break even 461.25 on the downside. The upside break even 518.75 is where you start making money on this, and that can be more than a double, Kevin, above 530. So it's skewed a little bit where you still make a little bit on the downside, but this is all about maybe that because remember you said it moved $50 last earnings. That's when the stock price was lower, so percentage-wise it was a lot bigger.
Yes.
So you're thinking about there's a plus or minus 8% move in the shares price in now. So you want to move on this type of trade.
I want this to move. Obviously, my opinion is to the upside.
far
if
out.
you think there's a potential move to the downside, you can flip this.
Right.
You can do the $10 call vertical, $20 put vertical. But this is using the fundamental strategy and you putting an opinion with my fundamental strategy.
I'll just stick with that.
I'm looking for, in paper money, this to go to the upside. but I don't want to just be all in bullish. I want to be able to get bailed out if I'm dead wrong.
It's already up.
Yep, you got about $35 on the upside, nearly $35 to the upside above that break even, and about 25 bucks on the downside there to that break even. But this is playing for a move. Kevin did give himself an extra week in this one, so not a pure earnings play. You've got 10 days till expiration on this one, but you need a move type of strategy. It's not a neutral one. You just need more than that one standard deviation move. All right, Kev, that's a good look at that long iron condor there in Netflix. Let's take a quick break and we come back.
Oh, that was a spy, you idiot.
PayPal with Lightfolio. The stock, the company has an innovation day on Thursday. Expectations moving higher. The stock's actually up 5-6% so far this year after a dismal 2022 and 2023. Fast Market's coming right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms.
I'd do that. I'd do the butterfly, broken butterfly wing. We're at 236, now it's at 250, 249. So if you buy the 480 call and buy a 487.50 put and a 490 call, that'd be a broken wing butterfly, if I think right. That would be a real good trade. I think that'd be better than Iron Condor. So far I'm green today. I was down a couple hundred there, 280 bucks at one time on that one trade, and that would have almost wiped out everything I made. I remember when I first started trading, I was happy to make $60 a day back in 2007, when I really started full time. Martha Stewart, she got thrown in prison for insider trading. And I said, well, heck, if she can get away with it, so can I. And that's right when I moved to Hawaii. We got something going on here in the market, getting a lot of alerts. Okay, Goldman Sachs, what are you doing in here? I don't want you on my scan. Put something else in its place. Tesla. I don't want to trade Goldman Sachs. Surprised that dweeb hasn't tweeted me yet. Well, your Tesla's not up yet. So that's not really a good flag right there. And I'll be right back. PayPal.
Driving a much better price for this stock.
I honestly think the Cash App is for younger generation, and I'm gonna put myself with you, Kevin, in that I think I've had like 2 Cash App transactions in my life, and I've probably had, not joking, 5,000, 10,000 Venmo transactions. So I'm in the Venmo camp as well. I love the company. I was Andy and I were actually one of the first, I think we were in the first 100 user accounts. We knew some of the VCs that invested in that very early on. So I love Venmo, but yeah, so far it seems to be, the younger generation, like I'm talking like teens and young 20s using Cash App. And I think a lot of it had to do with their Friday giveaways that they did. They got a lot of users in there, and Venmo is it's simple, it's useful. I mean, it just gets the job done. But I'm sure there's room for innovation, and I want to see what they're planning to do. I hope that a lot of their innovation revolves around the things that you're talking about, competing with Square for the small business accounts, and competing with Cash App for the younger generation, the more easy to use, I guess, interface. I think Venmo's fine, but you've got to be able to compete with Cash App. So I don't have a problem with Venmo. I think it's a great product, very simple to use. There's not a lot that needs to be there, but the iPhone wasn't needed either, right? And if you build it, you can create demand. So maybe they've got something up their sleeve that's going to create new demand and get a lot of businesses and people with people coming over to the app Venmo. We'll see. I'm really looking forward to Thursday.
Yeah, he said that they made too many acquisitions a couple weeks ago during an interview. The new CEO, Alan Chris, he basically said, hey, we did too many acquisitions, cost us too much money, it didn't get monetized. He said he's going to, put the strategy behind Venmo. You mentioned the Change the World type of innovation day that's expected on Thursday. Landon, when I look at your data, the mentions, The stock price is, fully below what you guys have as far as that comparison chart. But is this one of those stocks that, if they come out with something that's a little bit game-changing, because the stock's been beaten down, there might be a big short interest in here that we could easily see the stock pop, during Thursday's Innovation Day?
I think so. I mean, I think the risk here is that it's underwhelming and it's a sell the news,
Right.
and then you're back to the levels that it was trading at before. So I think the risk is limited to, a few points on the stock. But if it is sort of that game changer and they deliver as high as the expectations are, given what the stock has been through, yeah, absolutely. So I think that, your downside risk here is a few dollars, and your upside risk your upside potential is much, much larger than that. So I don't mind it as sort of a speculative play based on this event on Thursday. And I think really what's interesting about this is the timing of it is really going to move shift the focus of investors from earnings on February 7th to this event on January 25th. So the earnings could be a lot less important. We'll see, but I think Thursday is going to be the play, and I definitely agree that the upside potential is worth the downside risk, because I think worst case it's a sell the news, and then you're high 50s maybe, worst case, but this could run up through the 70s if something really great comes out.
Yeah, stock was trading just above 50 in October. It does have that ability to go down there. Deutsche Bank actually kind of agrees with you that the importance isn't the earnings on the 7th of February. It's going to be this Innovation Day, because that sets a tone for the next couple of years. All right, great stuff and great data as always, Landon. Appreciate it.
Thank you.
All right, that's Landon, my co-founder at Likefolio, breaking down PayPal. This is kind of why I wanted him to hit on this, because I knew they were having this Innovation Day. We've had some volatility in the stock over the last week or so, Kevin, based on the expectations that this new CEO is putting in. He was into it. He drove one of their business 23 compounded annual growth rate on a year-over-year basis in the segment that he ran. So expectations pretty high into this Innovation Day. How do you want to look at it?
I love the names. Yeah. Year of Efficiency, Innovation Day. I love all these names that
please buy our stock.
Yeah, exactly. So I agree with Landon. I agree with you. I agree with what the CEO says. There might not be a lot of downside here if they, let it dud when this happens. But if they do something game changing, the stock was $310, went to 50. Now it's 65.
Right.
It's the PE is relatively really inexpensive for historical. So what I did, Tom, being cognizant of the February 7th earnings date, I went out to the February 16th and did a diagonal based on that, knowing that I can continue to extend duration. One of them will be into the earnings event week, Tom. So I bought the 65 call, sold the 70 call for $360, knowing that I've got
330 or 330.
The hell's a diagonal?
Buying the Feb 16th 65 strike call, right?
Yes.
And then selling the February 2nd.
It's rallied a little bit then.
Yeah.
I'm sorry, I put it.
Write that down, look it up.
It was 330. I think the stock has rallied a little bit. It's trading up near 360 now. But yes, buying the 65 call, selling this week's 70 call.
We've got the February 2nd weekly options on there, which is what you sent, Kev.
That's what I know. I'm sorry.
Yeah.
On my computer.
Yeah. Buying the
my computer shut down.
Buying the Feb 16th monthly options that expire in 24 days. Selling the February 2nd weekly 70
I
strike
went out to
call.
next week.
Yep.
Okay.
70 strike
There
call.
you go. That's trading about 330. You're right. You guys are right. I had to restart my computer. It erased.
No worries.
I hit it. So, so this is trading about 325 now, and so, but again, it's the diagonal after earnings and then into next week where you'll get to extend duration on this trade into the earnings event.
Right. So let's break this one down that Kevin brought us. Buying that Feb 16th, 24 days to expiration, 65 call. Selling the February 2nd weekly that expires in 10 days, the 70 strike call. So $5 wide bullish, call diagonal to the upside, paying roughly about a 325, 330 debit on it. What you pay is your risk on it. As Kevin mentioned, as you get closer to expiration over the next 10 days, on that short February 2nd 70 strike call, you have that ability to roll or adjust it if the market's open, liquidity is provided, where you can create more credits and extend duration on this type of trade. $5 wide bullish call diagonal, you're paying only about 330 for it. So upside that break even about 65.50. Anything above that's going to be profitability on this type of trade, with the apex being at or near that 70 strike. So this is definitely a bullish play with the potential opportunity to extend duration if you roll or adjust that. Kev, when you look at this type of strategy, I always look at diagonals and I go, I want to pay less than the width of the diagonal on this one. That way I've only got one break even, and anything directionally that you put it, whether it's a put diagonal or in this case a call diagonal, is the way that I can profit on it.
I understand that theory.
Ready, set, go on the SPY
Is
here.
an effective one, except the further you go out in your dates, the harder
If
it
it
is
breaks
to get that.
resistance, I might.
There's an earnings event
I
or
don't know.
something.
And so that relationship, if I'm going out further in the calendar, then that doesn't scare me, because I know it's not going to $5. It's going to trade way higher than that if it goes to $70.
I actually learned on this channel.
I'm not scared of it, but I understand the common sense look and saying, why am I spending over? I don't want to spend over $5 for a $5 diagonal.
Yep.
But remember, it's the calendar spread version of this. That means you're going to pay more the further you go out.
February
for that long call.
16th.
Right, and it's got an actual anticipated market maker move in the near term options due to the fact that they have that innovation
Right.
event
I
coming
understand
up.
the theory. Just don't let it paralyze you from making the right decision. If your goal is to add more Vega by bringing that date out.
All right, good look at a call diagonal there to the upside in PayPal if you think it's going to go higher. All right, let's take a quick break. When we come back, we're going to take a look at Texas Instruments. The stock of the chip maker has rallied about 26% from October's 3-year lows. They've got earnings after the close. This will be a big one. It's a broad-based chip name. Fast Market's coming right back.
I'm gonna watch a video on diagonal calls. Not now, but tonight. That sounds like a pretty good deal. Got some pretty good buys coming in on the SPY right now. Make sure you drink enough water. I'm gonna go fill mine up. That was very unprofessional, James. Don't ever do that again. We're still squeezing on DWAC. Come on. Unbelievable. No, we're not. We're out of the squeeze, but we do have another squeeze happening. There's the squeeze right there, and it went back down to support. God, I got a headache. I'm going to go take an aspirin. Up, there we go. SPY. God. Where did all these come from? There I go again, charting the wrong damn thing. Be at $20 right now if I took that. Break the VWAP. We're back to the VWAP. I'm not in it. I did notice the double bottom down here, the 1, 2, 3. I just looked at it. One tubus and a freebie. Boom. That would have probably been a little bit better trade right there if I took that one. But I'm just leery today.
It's not, Tom, and I think if you look at the breakdown of their revenues, I mean, the industrial end markets are about 40% of...
I do like these guys better than CNBC. There's no politics on here. They explain every trade out. They give you ideas. They teach you throughout the whole day how to take options. I mean, you really, just a lot of good things going on here. TXN.
For electronic space as well. So, I mean, overall, looking at the stock, it's actually down about 1.5% in the last 52 weeks. You are generating about a 3% earnings yield or dividend yield to offset that, but it's been relatively weak, even though it's been up nicely since the late October, early November lows. But if you actually consider what's going on in the industrial space, especially in the automotive space, just looking at Tesla and some of the other EV manufacturers, I think that's part of what's happening with Texas Instruments. But if you consider the earnings, they're expected to be quite low, comparatively speaking. Around $1.49 are the estimates. Compare that to $2.19 for the same quarter last year. That's down about 31%. And sales are actually expected to be down about 10% at $4.13 billion. So coming into the quarter, as they're going to be reporting this afternoon, things are expected to be weak for TXN. A lot of times, when the analysts recalibrate their revenue and earnings guidance, they come in conservative, and if they do beat, maybe we'll see some push to the upside. I think if you look at Qualcomm as well, I know it's a different company, but that stock hasn't performed all that well in the last 2 weeks because I think the wireless component of their business has been sort of a soft area. And then you add in the industrial space with TXN as well as the automotive space, and I can see why the stock is sort of stuck in the mud, for lack of a better word, in the last year.
George, I see comparisons with Texas Instruments right now to Amazon, which is they go through these periods where they spend a bunch of money, right? And they redo everything. Right now, Texas Instruments is remaking a bunch of state-of-the-art fabs, spending a bunch of money to set themselves up for late, mid and late decade. Is that what you're seeing here? Do you have to take a long-term view of Texas Instruments, looking to the second half, maybe of this decade, for all these investments to start paying off?
Yeah, absolutely. I think that's a great point, looking at it from a long term. Ideally speaking, on a long-term basis, just quickly for valuation, it's trading right around its 5-year multiple. It's actually been lower from the standpoint of revenue growth. I mean, traditionally it's around 5% with earnings around 9%. the growth estimates for TXN forward 4 quarters. Revenue is estimated to be still down about 1%, with earnings growth down about 4%. So there's a conservative view going forward for TXN. But I think you're right, too, because you have to consider longer-term view of this company. I mean, it really is a sort of a dividend machine. They're paying about $5.20 out of about $7.12 expected earnings, and that's about 70% of their earnings, which is quite high historically speaking in terms of the payout ratio. But you can
I just go have these flashbacks when I used to trade this thing. I said, what? 175? I haven't traded this thing in, I guess it's been not that long ago. I keep thinking 20. I even think lower than that when it comes to Texas. I love Texas. It's a bull flag. These are monthly. We had 3 black crows. That would have been a perfect trade. 3 black crows, 3 black crows, 3 black crows. Happens every other year. Just a little bit too much for my blood. Now, if you look at the month, if you look at the yearly, it can move up. Long 190, $15. I'm going to set an alert right here at 172 on the 20-day 1 hour, 172.25 for Texas Instruments, symbol number TXN. Alert set. Yeah, is Washboardjim listening to us?
Sell the 185 call. Buy the 170 put. Sell the 165 put. $5 wide. Paying roughly about $215 debit. It's actually lower. Maybe you pay $205 for it. But the debit you pay is your risk on that $215 per spread. But you see your break evens, Kevin. 167.85 on the downside. 182.15 on the upside. It's a shorter term position than yours is, but it's equal distance.
God,
and you're paying
SPY
less
just
than
popped.
half the width of the strikes. You need to move on this type of strategy.
Right. The payoff is better if you're right because you've got less days till expiration. Right?
There you go. Jimmy called it and didn't take it. Oh boy. If I'd have held that thing, let me see. Oh no. I just threw away $300. Again. I didn't throw it away. I mean, I left it on the table. Suck. To 116. Why? What have I ever done to you, Julie? What have I ever done to you, Laura? I give you my house. That was nice of you, Jim. Thank you very much. Golly. Oh well. I used to laugh at a guy. What do I got two times on there? That's not cool. About 4 or 5 years ago, I seen this guy on Stock Twits that had all these lines on here. What the heck? I'd look at him and say, what? I kept figuring, what's he doing? And then I started learning chart patterns a little bit more specifically, and then I got to understand what he was doing. It's like this head and shoulders right here. So you draw that head and shoulders in out of the wedge. And then eventually, bam, it hits that head and shoulder line, pulls back. And then you got another head and shoulders right here. Inverse head and shoulders. Left shoulder, head, right shoulder, right shoulder. And I started understanding what all them lines represented. I think TrendSpotter has something like that, but it's a lot more confusing. I can't remember what that indicator was. Damn it. Look at that. Suck. I got out at 106 and it's at 124. $0.18 times 30. $18 times 30. $540. That really hurts me. Okay, I'm speechless. That was the spy. $513 with the spy. That's unusual. So that would have been worth it. $2,700 investment, and I would have made, let me see, $1.24 minus .98, 26 times 30, $780 out of $2,700. So that's not a bad investment. But I'd had to wait all day and whine and gripe and hope that I'd get out of it. But I mean, the setup's there. I'll show you, make it a little bit more clear here. Just got to be a little bit more patient with it today. Kind of my body myself was telling me to be a little bit more lenient, not lenient, but careful. So if I take the big picture, flag, flag, breakout, pull back, another flag, breakout, pull back, inverse head and shoulders. I probably wouldn't have. I probably would have jumped in right here. There's your fallen wedge. Breakout, pull back, and I jumped in right there and run it on up and got out of it probably once I hit that resistance. And then you got another snake. So you didn't break out until there, and I would have waited. Then I'd have got in on that hammer. Who knows? 3 white soldiers, I probably would have sold right there. Oh no, though, it don't look too bullish. Had another breakout here. Inverse head and shoulders. Breakout, pull back. Boom. I'd have definitely took that one. Yeah, that's a pretty good little chart right there. American Airlines, AAL.
Crude oil come down over the last year, but it's the other costs, things like wages and things not fuel, that have really weighed on these airlines. So we'll get more of this story, but like you've said, Jenny, when it's come to Delta, now United, we got a pretty darn good idea of what this story looks like for American. It's just going to come down to the nuances, how they've hedged, how they haven't hedged, and some of those differences, what the demand looks like. One more piece of the puzzle, but we got a lot of it done now. It's like when you're in the final stages of actually doing a puzzle, and it's so satisfying when you put like the last two pieces in. Just one of the last pieces alongside Southwest.
I know, now I'd almost say, like, given the various headwinds that have plagued Southwest, United, American, and Delta are almost the three that I compare the most closely to because they trade the most closely. The other names are like off on their own tangent, really have their own news. So at this point, I grouped the three together. But now to shift gears here, look at another name with earnings. That is Seagate Technology, which is expected to release its quarterly update Wednesday after the closing bell. So Seagate's performance likely to be aided by the fact that they've seen this global macroeconomic turmoil, which is expected to then have eased this quarter, given some of their exposure to China. The company also is expecting its second quarter performance to be affected by inventory digestion overall by their clients, and expects its enterprise system business to be affected by the reserved IT spending also amid some of this weakness. But this company is expecting now here a loss per share of around 8 cents for the quarter. Revenues pegged at around, we are expecting revenues to slightly contract on a year-over-year basis. They have a negative earnings surprise of almost 50%, so it just goes to show their earnings are a little bit all over the place. So we will have to wait and see what those look like once we get those results. And I think I misspoke. I believe they're Thursday pre-market, not Wednesday pre-market. So something to consider there.
Yeah, we got a little bit of time, 24 hours, but a good chance to look at a name that probably won't be as covered on the day that Tesla will dominate headlines. So I wanted to look at this, though. This chart, to me, tells the story and why this one fascinates me.
STX.
This is a real test. You got a stock on 52-week highs essentially by the second. That's a really high bar now for them to reach. We'll see if they can. And that's going to be the story, I think, for this entire earnings season, as it has been for the last couple earnings seasons. The better performing names have struggled to meet those bars largely. The underperforming names, think United, able to reach those even with disappointing results largely.
Yeah, it's been quite amazing, frankly. And our last name has been perhaps the most amazing, and that is not even my opinion. I think their performance speaks to that, as that's AMD. Shares are up 121% on a year-over-year basis and up about 15% since the start of this year, even with a 3% pullback just this week. So, of course, just over the last two sessions. But this name has now risen about 135% from its 52-week lows, with a modest gain today, but the street continuing to favor this name. Cantor Fitzgerald starting coverage with an overweight rating, $190 price target. They said this is part of their overall coverage on 18 various names in the semiconductor and semiconductor equipment industries. They also view AMD now as this key beneficiary of the market's search for alternatives to NVIDIA as far as accelerated computing goes. They see buy side continuing to push an estimated $6 in earnings per share as a stretch goal for AMD shareholders. So $190 price target's not too shabby. We're trading just around $168 right now. But I do think right now everyone is looking for the alternative to NVIDIA, just given NVIDIA's outperformance, which it continues to really rally this year. Same with AMD, actually.
Well said. I don't even have anything to add. The only thing I'm going to say is this one could be a subject of discussion any segment, any day on this show, as it often is. The reason we're not going to look at this in the next segment is just because we're like a week away from earnings. We're in that really awkward time frame. I think it's the 30th, so it's exactly a week from today. If that's the case, we're going to be coming back to this next week, so you'll have to wait a little bit longer, but we're excited for next week when we get to hear from AMD.
So my computer, this is the one that I use. It's called the Stratosphere Pro, AMD, Ryzen 700 CPUs, 7,000 CPUs, and I upgraded the
some technicals,
the RAM,
as well as some example trades in both of those names.
And I upgraded the something else. I upgraded it. We got the, not that one. I think it's this one right here, Stratosphere Pro, with 4 monitors. That's a killer computer. $1,759 it starts out with. It's $2,000 after I got done with it. With this here look. But there I've got them straight across like this. And that's another $1,200. Digital Tiger.
Out of United, but now we have American with its own results to unveil later this week. So walk us through what you're seeing from the technicals.
Yeah, this one, you know, the thing that I thought was most interesting is that we started off here like kind of at our 52-week highs just above 19, took us straight down into the 52-week lows just above 11. So a significant...
It's got to be the weekly.
And relatively fast decline here. Now we've managed to recover about 30% from those lows, but we've kind of found ourselves in a tricky situation here because we had our upward sloping trend line here that was broken. We didn't have a big, you know, breakdown necessarily. We did have you know, a bit of a decline here, but we went right back up, retested these old highs near 1465, slipped below the trend line once again, and have been unable to recover.
What's he doing with his hand?
Yet at this point, we have our moving averages coalescing together in a relatively narrow range between about 1343 to 1413. So tightly moving together, suggesting a lack of a clear trend here. That's what moving averages clustering together and moving sideways suggests to us here. We can see now that even though we've made our way above the orange 63 and yellow 21-day exponential moving averages,
63 keeps taking that 63.
Above the purple 252-day and stick there. We're just, I think, we're a cent below it
And the
right
21
now.
EMA.
So that's definitely something to watch as we head into the close today to see if we can make our way above this crucial level here. Volume also stood out to me recently. During this choppy trading environment where we've established a bit of a range here, we're seeing volume spikes. By a volume spike, I mean when volume is at least 50% above the 50-day simple moving average of volume here. So we've seen some heavy trading. It'll be interesting to see the volume profile study to see where the trading is taking place. We'll get to that in a little bit here. But for now, kind of a sideways environment really here between about 1289 to 1465. You can see we had some bottoms established there as well. So, you know, some clear levels to watch for a potential breakout.
So now as far as the momentum of this trend, because we're looking for this breakout, we're hoping for some upside when we get their earnings Thursday before the market opens. But what are you seeing as far as RSI?
RSI compressing in a triangular type shape here. One trend line going across the highs, sloping downward. one trend line going across these lows that we established here, sloping upward here. So depending on how you slice it here, you could say that you know, we could be looking for a directional outlook either way with a breakout beyond either of these two lines. Right now, slightly favoring the upside here because we are above that 50 midline here. We're coming quite close to this red trend line that's sloping down here. So if we do get a push above this top of our range here and a breakout on the RSI, that could be a clue that things are progressing more to the upside here. But we'd want to see a strong close in price above that 1465 level. Price is the most important thing here. The indicators are ancillary to price. You don't want to make decisions based on the indicator if price isn't matching up with what you're seeing here. That's a difficult situation to put yourself in, not really what you want to do.
And of course, use multiple technical indicators typically and wait till we close, as you always echo, because things can tend to move as we obviously have several hours left in the trading session today. But now, as far as support and resistance, what levels are you keeping on your radar? Because this name is seeing some outsized volume today. I'm just assuming ahead of earnings and on the back of United's earnings.
Well, the two levels that I mentioned earlier, these two kind of points during which we've established our low point and our high point of this recent range we've been in, happen to match up with some volume nodes here. Our lower level right here matches up with our volume profile point of control just above 13. That's the area of heaviest trading on the chart here. So this is a key price level to hold. If we do break below that point, perhaps look for some solidification here around that 12 level, maybe around here. That could be one area to watch if we do get another leg lower here. To the upside, our old highs near 1465 where we hit twice.
The fudge. What have I done? Huh. Looks like it froze up on me or something. Yeah, platform froze up. Don't see a reason. I was just boasting about this thing. I might shut this down. I don't know what's going on here. Can't find any. Huh. I might shut down for a second. Figure out what's going on. Hello. I'm going to shut this thing down and I'll be right back.